Very good afternoon to everyone. I hope you are able to hear me. Yes. Okay. So my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this Inter CL live marathon for May 2026. Now, the earlier marathon was for January 2026. ज़्यादा चेंजेस नहीं आए हैं. तो जो जनवरी 2026 का मैराथन है दैट इज ऑलरेडी अवेलेबल ऑन जेकेएससी यूट्यूब चैनल प्लस अमेंडमेंट्स फॉर मे 2026 हैव हैपेंड. उसका भी अलग से एक वीडियो लोडेड है ऑन जेकेएससी यूट्यूब चैनल. दैट इज इफ यू हैव सीन जैन 2026 अमेंडमेंट वीडियोस प्लस द मेन वीडियो और आपने मे 26 का अमेंडमेंट वीडियो दे दिया देख लिया है तो दैट इज मोर देन सफिशिएंट. नाउ अभी हम लोग क्या करेंगे, सारा का सारा चैप्टर्स रिवाइज करेंगे. आई विल ट्राई टू कीप मोस्ट ऑफ दी थिंग्स इन इंग्लिश ताकि जो आपका लैंग्वेज हो वो एकदम वही फ्लो में आए. इट्स वेरी इंपॉर्टेंट कि आपका जो लैंग्वेज फ्लो होता है एग्जामिनेशन में हर प्रोविजन का दैट हैज टू बी रिटन इन इंग्लिश. आप भी इंग्लिश में ही लिखने वाले हैं एंड दैट्स द रीजन जितना आप इंग्लिश लैंग्वेज के वो सेंटेंसेस सुनते जाएंगे ऑफ द प्रोविजंस द सेम विल कम आउट ऑटोमेटिकली व्हाइल यू आर राइटिंग इन द एग्जामिनेशन. ये अपने आप होगा. तो जैन 26 वाज मोर ऑफ हिंदी. तो अगर आपको ज्यादा हिंदी देखना है तो जैन 26 का ऑलरेडी अवेलेबल है जेकेएससी यूट्यूब चैनल पे. पर इफ यू वांट टू improve the language writing in the examination then this is the best one. क्योंकि उससे क्या होगा, you will be able to easily go through everything for May 2026. ठीक है. हाँ, so that will help you to improve the language and that will help you to write well in the examination. That is the basic fundamental principle. अब पहले हम लोग इंट्रोडक्शन से शुरू करेंगे प्लस ये 9 PDFs. All these 9 are available in the description of this YouTube video. यही पीडीएफ मैंने जैन 26 के लिए बनाया था. यही पीडीएफ मे 26 के लिए हम लोग यूज करने वाले हैं एंड इसमें हम लोग अमेंडमेंट्स अलग से कवर करेंगे बिकॉज अमेंडमेंट्स प्ले अ वेरी इंपॉर्टेंट रोल इन योर एग्जामिनेशन एंड दैट इज द रीजन वी विल बी फोकसिंग मोर ऑन अमेंडमेंट्स. एंड सुपर 50 का अलग से एक यूट्यूब वीडियो है दैट you can watch. That was for Jan 26. Same will apply for May 26. तो आप amendments देख लेंगे तो आपको sufficiently May 26 के लिए ये भी use हो जाएगा. अब with this introduction let's now begin with the provisions. सारा provision शुरू करते हैं. Let's begin. So first we are going to deal with introduction. अभी इंट्रोडक्शन एंड सप्लाई चैप्टर दोनों हम लोग साथ में करेंगे. इसमें हम लोग क्या क्या चीज करने वाले हैं. वी आर गोइंग टू डील विथ 6 थिंग्स. कॉन्स्टिट्यूशनल प्रोविजंस, टाइप ऑफ टैक्स, ऑर्डर ऑफ यूटिलाइजिंग आईटीसी, aggregate turnover and registration limit which is very important and it will be useful in different chapters. Charging section, section 9 will be discussed completely. And last one is supply, which will cover the entire supply chapter. So these are the 6 things which we will study. अब कॉन्स्टिट्यूशनल प्रोविजन देखा जाए तो फर्स्ट इज आर्टिकल 265 which says no tax shall be collected unless it is authorized by law. So any tax if it is getting collected it will be authorized by law. If there is no law for that then in that case the tax cannot be collected. There is no new act of GST. Same GST Act continues. GST Act which was introduced in 2017. तो नया एक्ट तो नहीं आया है, वही एक्ट में अमेंडमेंट्स आते रहते हैं. दैट्स व्हाट वी आर डिस्कसिंग. Article 246. Article 246 gives three breakup. It divides the power in union list, state list, and concurrent list. Whatever is mentioned in union list, law will be made by the central government. Whatever is mentioned in the state list, law will be made by the state government. Concurrent list, both central government and state government will make the law separately. Now, this was the problem. If both are going to make the law separately, then there will be a separate law for CGST, there will be a separate law for SGST, and there will be no consistency. Consistency is very important in taxation. That's the reason they brought Article 246A, which deals with intrastate supply, where the power to levy tax is with both central government and state government. Both have the power to make the law for intrastate supply. What is intrastate supply? When the location of supplier and place of supply is in the same state or union territory, then you call it as intrastate supply. We will have a full chapter discussion of place of supply. But what is the importance of place of supply? We compare place of supply with the location of supplier and we get to know whether it is a intrastate supply or interstate supply. So for intrastate supply, both central government and state government have the power to make the law. 246A. 269A. 269A provides for interstate supply, where the power is with central government. The law-making power is with central government and it will be apportioned as provided by the parliament. Parliament will decide how to apportion it. How is it done? Half goes to central government, half goes to state government. And if it is related to union territory, then it is kept by central government. So that is how interstate supply is apportioned and half is shared with state government. Then comes a very powerful body which is GST Council, Article 279A. Now GST Council, both central government and state government have the power to give recommendations. Who sits in GST Council? Central government and state government. Central government is represented by Union Finance Minister, who is also the chairperson of GST Council, and Minister of State for Revenue. State are represented by 31 state finance ministers. Totally 31 state finance ministers are there. 28 states and 3 union territories. Don't forget, 3 union territories are always regarded as states. Exam mein you will write it as union territory, but for the purpose of GST, they are regarded as a state. Okay. Delhi, Puducherry, Jammu and Kashmir. These three are regarded as states. That means it will have CGST and SGST because there is a elected government, there is a finance minister, and hence it is 31 state finance ministers. Now, what is the voting power? Voting power of central government is one third. Voting power of state governments taken together is two-third. The required majority to pass any decision in GST Council is 75% of the members present and voting. Then, what is the required quorum? 50% of the members. If 50% of the members are present, then it is regarded as a valid meeting. Now, when we say 50% of the members, how do we decide this 50% of the members? Total members. What is the total members? 31 here and 2 here. So, total comes to 33. 33. So, required quorum will be 17 members. If 17 members are there, then it is considered as a valid meeting. Two very important points. GSP. What is GSP? GST Suvidha Providers. Who are these GST Suvidha Providers? They are information technology software service providers who facilitate communication between the taxpayer and government. So basically, they help you and develop IT softwares. And what is GSTN? GSTN is GST Network. GST Network is a Section 8 company which owns and manages the common portal. The entire common portal is owned and managed by this Section 8 company. This Section 8 company, who has the ownership of this? Central government and state government. And what is the common portal? gst.gov.in. And for e-way bill, we have a separate portal, ewaybill.gst.gov.in. So basically, common portal is where all the activities relating to GST is done. Every activity relating to GST, like registration, payment of taxes, receiving notices, getting replies, getting orders, everything is done on the common portal, which is owned by a Section 8 company under Companies Act, which is GST Network. So, what did we discuss? First, we discussed constitutional provisions. Article 265. No tax shall be collected unless authorized by law. Article 246, read with 7th schedule, has three lists: union list, state list, concurrent list. The problem with concurrent list was central government and state government will make the law separately. That's why we wanted to bring 246A. 246A deals with intrastate supply, where central government and state government will come together and make the law. They will make two different acts, but there will be consistency in CGST Act and SGST. What is intrastate supply? When the location of supplier and place of supply is in the same state or union territory. Then 269A, interstate supply. The power is with central government, location of supplier and place of supply is in different states or different union territories. Then 279A, GST Council. GST Council is represented by central government and state government. They give recommendations to central government and state government. Central government, two people: union finance minister, minister of state for revenue. State government, 31 state finance ministers, 28 states, 3 union territories which are regarded as states: Delhi, Puducherry, Jammu and Kashmir. Central government, one third voting power. State government, two-third voting power. Required majority, 75%. Required quorum, 50% of the members. GSP, GST Suvidha Providers. They are information technology software service providers who facilitate communication between taxpayer and government. They help you to send the data from your books of accounts to the common portal. What is common portal? gst.gov.in. Who is the owner of common portal? GST Network. What is GST Network? Section 8 company under Companies Act 2013, which owns and manages the common port. Fair enough. Now we move on to type of. Now, in any question, there can be only three types of combination of taxes: C plus S, C plus UT, IGST. C plus S is applicable in case of intrastate supply. That means the location of supplier and place of supply should be in this state or union territory. Three union territories: Delhi, Puducherry, Jammu and Kashmir. Be very careful on that. Then coming to C plus UT. C plus UT will be applicable when it is a intrastate supply, five union territories. Which five union territories? Lakshadweep, Ladakh, Andaman and Nicobar, Chandigarh, and Daman and Diu and Dadra and Nagar Haveli. This Daman and Diu and Dadra and Nagar Haveli is considered as one union territory. That means if there is a transaction from Daman to Diu, C plus UT, Daman and Diu to Dadra and Nagar Haveli, C plus UT, Daman and Diu to Chandigarh, IGST. Because the moment they are two different states, two different union territories, IGST, because then it becomes a interstate supply. Be very careful that the transaction within a union territory will be subject to C plus UT. The transaction between union territories will be IGST. So Lakshadweep to Ladakh, IGST. Within Lakshadweep, C plus UT. Within Delhi, C plus S. Within Pondicherry, C plus S. Within Jammu and Kashmir, C plus S. Within Andaman and Nicobar, C plus UT. Andaman and Nicobar to Delhi, IGST. Andaman and Nicobar to Lakshadweep, IGST. Daman and Diu to Chandigarh, IGST. Karnataka to Maharashtra, IGST. Maharashtra to Gujarat, IGST. So the moment it is interstate supply, IGST. In intrastate, you can have either C plus S or C plus UT. If it is within those 31, then C plus S. If it is within those five union territories, C plus UT. Type of tax, be very smart. How do we decide? Two factors: location of supplier, place of supply. If location of supplier and place of supply is in the same state or union territory, C plus S or C plus UT. Different state, different union territory, IGST. Normally, in your first question, this is one very important aspect which is tested to be very, very strong in whether it will be a C plus S transaction, IGST transaction, or C plus UT transaction. Okay. Now let's move ahead. Order of utilizing ITC. Now, order of utilizing ITC, again, a very, very important aspect, because you will have to use this order of utilizing ITC in any question of utilization of ITC. Whenever net tax payable is asked or tax payable is asked, you have to do output minus ITC. Now, for doing that output minus ITC, you have to determine the order of utilizing ITC. Now, you understand very well that there are two types of supplies: inward supply and outward supply. Inward supply is where you have paid some tax and you get ITC. Outward supply is the tax which you collect from the customer. You collect this tax from the customer and then you pay it to government. Correct? Okay. Now, how do we take this forward? Now, please understand that if you are collecting some tax from your customer, you have to pay it. Now, you can pay it using either e-credit ledger or e-cash ledger. Now, e-credit ledger is from this, that is your inward supply, and e-cash ledger is when you deposit money in your e-cash ledger. So you pay output using e-credit or e-cash. And where does output get reflected? E-liability ledger. You are aware of this. Now, how do you use ITC? First and foremost, you have to use IGST, and this is mandatory. You don't have a choice. IGST has to be used first, then only you can go to C or S on purchases. So first I will be used to pay I, then I can be used to pay C or S, any order, any proportion. I can be used to pay C or S in any order, any proportion. Now, generally, you can use half half. You can use I against I, and then I against C half and S half. This you will do when the balance of C and S ITC is equal. If the balance of C and S of ITC is equal, then use I half half. But think logically. If you have more of CGST, think. If you have more of CGST, then how will you use I after using I with I? Sir, if I have more of CGST balance, then I will use more I against S. So that's where you have to be a bit smart, that whenever you have excess balance of IGST, use I with I and then check which ITC is more, which ITC is less. If you have more of CGST, use I more against S. क्योंकि C तो you already have, so use I against S, and then balance you can use against C. So that is a approach which you will use. Now let's see it with an example. Say suppose output is 100, 20, 20, and you have 110 as IGST ITC, and CGST ITC is 10 rupees, SGST ITC is 20 rupees. Now see, which ITC do you have more? You have more of SGST. As you have more of SGST, you will use I more against C. Why you will use I more against C? Because S you already have a lot of balance, and that's why I you used against I, and after using I with I, you used I with C, because S is already very high. So you subtracted this and got 10, 20, and then you use CGST to pay CGST, SGST to pay SGST. Your tax payable became 0. So let's have a look at order of utilizing ITC again. First, I will be used against I. Then I can be used against C or S, any order, any proportion. Then C with C, C with I, and finally S or UT with S or UT, and then S with I. So first, second, and then third. Be very careful in the order of utilizing ITC. Never use CGST ITC before using IGST ITC completely. So use IGST ITC first to pay I, CRS, any order, any proportion. Then use CGST ITC, first C with C, then C with I, and finally S with S, S with. So careful on this particular aspect. Then a very important discussion, which is registration limit. And with registration limit, we will also discuss the meaning of aggregate turnover. Now, registration limit, aggregate turnover. So what do you check for registration limit? Check your aggregate turnover. Aggregate turnover means taxable supply, exempt supply, interstate supply, export of goods or services. If you notice, all are outward supply. So any kind of outward supply is forming part of aggregate turnover. Taxable supply, exempt supply, interstate supply, export of goods or services. Be careful. Negative list is not part of aggregate turnover, because negative list is not at all a supply. Then non-taxable supply, like alcoholic liquor for human consumption or 5 petroleum products, they are part of aggregate turnover, because they are covered by the definition of exempt supply, because exempt supply includes something which is wholly exempt, something which is nil rate, and lastly non-taxable supply. So non-taxable supply is also part of aggregate turnover. Be very careful on this. Then it excludes two things. What does it exclude? It excludes GST. GST is not part of aggregate turnover. Inward supply under RCM. See, inward supply under RCM, you pay the tax, correct? Inward supply under RCM, you pay the tax, but still it is not part of aggregate turnover, because aggregate turnover is only your outward supplies, not your inward supplies. Careful. Okay. Now, what is the registration limit? Registration limit has to be calculated for a financial year, correct? Not for preceding financial year. Be very careful. It is calculated for a financial year, not for preceding financial year. Okay. If you are dealing only in goods, then in that case, you have three limits: 40 lakh, 20 lakh, and 10 lakh. 40 lakh is applicable for all states and union territories. 20 lakh is applicable for must UP, Meghalaya, Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, and Puducherry. 10 lakh is applicable for Manipur, Tripura, Nagaland, Mizoram. For Manipur, Tripura, Nagaland, Mizoram. Then for goods or services. Now, when you talk about goods or services or only services, for all states it is 20 lakh. For Manipur, Tripura, Nagaland, Mizoram, it is 10 lakh. 1 minute, I think it is. Green is freezed, right? Just give me a minute. Hello, hello. Yeah, now you are able to see the screen. Yes, and you are able to hear properly. Okay, so let's continue. Registration limit, aggregate turnover. Aggregate turnover in a financial year. If you are only dealing in goods, three limits: 40 lakh, 20 lakh, 10 lakh. 40 lakh for all states and union territories, 20 lakh for Manipur, Tripura, Nagaland, Mizoram, 10 lakh, and 24 must UP, Meghalaya, Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Puducherry. If you are dealing with goods plus service or only services, then two limits will apply: 20 or 10. 10 for Manipur, Tripura, Nagaland, Mizoram, and 20 for everyone else. Correct? Okay. Then let's see the definition of exempt supply very carefully, because exempt supply definition is very, very wide. Exempt supply covers something which is wholly exempt, something which is nil rate, and non-taxable supplies. Now, what is non-taxable supplies? Alcoholic liquor for human consumption, undenatured extra neutral alcohol used for manufacture of alcoholic liquor for human consumption. Be very careful. Undenatured extra neutral alcohol used for manufacture of alcoholic liquor for human consumption. It should be used for manufacture of alcoholic liquor for human consumption. Only in that case it will be regarded as a non-taxable supply. If undenatured ENA is used for manufacture of medicine, then it is a taxable supply. Then it is not a non-taxable supply. Only when it is used for manufacture of alcoholic liquor for human consumption, it becomes a non-taxable supply. Then you have five petroleum products. Five petroleum products, you know it: petrol, high speed diesel, aviation turbine fuel, natural gas, and petroleum crude, which is basically crude oil. So, totally, how many products are there in non taxable supply? Totally, seven products are there. These seven products, do they form part of aggregate turnover? The answer is yes, they form part of aggregate turnover because these are covered by the definition of exempt supply. And anything which is covered by the definition of exempt supply will obviously form part of aggregate turnover. Okay. Then talking about zero rated supply. See, zero rated supply is export of goods or services or supply of goods or services to SEZ unit or developer for their authorized operation. Basically, exports get a huge benefit. What is the benefit? They We can avail ITC, and you don't have to pay anything on outward supply. So one, you get ITC. Second, you don't have to pay anything on outward supply. Zero rated supply is the most special transaction. Does zero rated supply also form part of aggregate turnover? The answer is yes, because zero rated supply, the rate of GST on that, if the export product is done, then it will change to zero rating. And remember, it is not nil rate. Nil rate is different, zero rated supply is different. Nil rate is a exempt supply. So if you use something for nil rate, you will not get ITC. But if you use something for a zero rate, plus you get ITC of any goods or service which is used for zero rated supply. Be very strong with the language. Okay. Okay. Now let's move forward. Now let's talk about section 9, which is the charging section. See, charging section basically deals with levy of GST. Any goods or services on which you pay GST, that is because of the charging section. Section 9 of CGST Act and Section 5 of IGST Act. Section 9 and 5 have two major differences. 9 deals with intra-state supply and the maximum GST rate is 20%. 5 deals with interstate supply and the maximum rate is 40%. Be very careful. Is GST rate of goods or services in your syllabus? The answer is no. product wise rate of GST is not in your syllabus. Remember that rate of GST will be given in the question. You don't have to worry about it. It will be given in the question. And that's why you will see here it is clearly mentioned that one. Yeah. Sorry for the disturbance. Section 9. Section 9 and Section 5. 9 deals with levy of CGST. 5 deals with levy of IGST. So that is the basic difference between Section 9 and Section 5. Now, as I said you, there is no need to remember the rate of GST. Rate of GST will always be given in the question. Now let's talk about specific provisions. 9.1. 9.1 deals with forward charge. All goods or services except two products. Which are those two products which are excluded? Alcoholic liquor for human consumption and denatured extra neutral alcohol used for manufacture of alcoholic liquor for human consumption. The rate of GST will be decided and notified by central government on the recommendation of GST Council. Remember, the rate of GST has to be only on the recommendation of GST Council. Then, when we talk about value, value will come from section 15, where we will have a separate discussion on valuation. Now, talking about five petroleum products. See, five petroleum products are to be brought under GST at a later date. When will that later date come? We are not sure. It's been around 9 years now. Till now, later date has not happened. All five petroleum products are outside GST. So when you read 9.1 and 9.2, totally seven products are outside GST. Alcoholic liquor for human consumption, undenatured extra neutral alcohol which is used for manufacture of alcoholic liquor for human consumption, and five petroleum products. Next, 9.3. 9.3 is reverse charge mechanism. Government has the power to notify goods or services on which recipient is liable to pay tax to government. Now, the moment recipient is liable to pay tax to government, it becomes reverse charge mechanism, because the moment government says recipient has to pay, specific provision will override general provision. 9(1) is a general provision, 9(3) is a specific provision. Now, notice one thing. In 9(3), there is no mention of whether supplier has to be registered or unregistered, whether recipient has to be registered or unregistered. It doesn't matter. Supplier can be either registered or unregistered, recipient can be either registered or unregistered. 9(4). 9(4), supplier should be unregistered, recipient should be registered. Notified goods or services, only then RCM will apply. 9(4) only has real estate sector. After some time, when we discuss RCM, I will tell you about that real estate sector. Then 9(5). 9(5), eco is responsible to pay the, correct. Eco will pay the tax as if he is the supplier. As if he is the supplier. And what all is notified under 9(5)? Totally five things now. You will find four things here. One more addition has happened in May 26 that we will discuss in amendments, and I will tell you here also. Because these notified services, ECO has to pay the tax as if he is the person liable to pay. We will discuss it in detail later. But what are the five services? Transportation of passenger, restaurant, housekeeping, accommodation, and now government has added local delivery. Local delivery. Local delivery. Have you heard about Zomato, Swiggy doing local delivery? Instamart, Zepto, Swiggy, Instamart, and then you have porter where local delivery can happen. Say suppose you forgot your book at home, and you can just send a porter will pick it up from your home, bring it to your classroom. So that local delivery, eco will be responsible to pay the tax as if he is the supplier. We will discuss these entries in detail, but at present five sectors are covered in 9(5). Anything other than this 9(5) will come under 9(1). And be very careful. The most important word is notified services through e-commerce operator. Through e-commerce operator, not by e-commerce operator. Because whenever it is by e-commerce operator, it will be a case of forward charge. That means, take an example of Netflix. Netflix is directly charging customers. Is it through e-commerce operator or by e-commerce operator? It is by e-commerce operator. By e-commerce operator will always fall under forward charge, never under 9(5). Plus, whenever Zomato or Swiggy is directly charging something to you as platform fee, that platform fee is also 9(1), because Zomato or Swiggy is directly charging you, is by e-commerce operator. Whenever it is by e-commerce operator, it is a clear case of 9(1), forward charge. Eco will collect the tax and pay it to government. Okay. Now let's move on to, so you know, seven products are non-taxable supply that we have already discussed. Now let's talk about supply. Section 7. Sir, are we required to remember the subsections? No. Are we required to remember the section? Try to recall some important sections like section 7. Some important sections I have also given it in this. If you remember that much, it is sufficient. Subsection, no need to remember. You should know the concept relating to this. Now, section 7. First, let's talk about supply for consideration in the course or furtherance of business. If these three conditions are satisfied, then GST gets triggered. Supply of what? Supply of goods or services. Do you know what is goods or services? Goods means movable property other than money and securities. actionable claim is included in the definition of goods. Services means anything other than goods, money, securities. That means money and securities are neither goods nor services. Money and securities are neither goods nor services. But what about any commission or brokerage for arranging securities? That will be liable. For transaction in money, if some commission is charged, that will also be regarded as a service, that will also be liable to commission. So be careful. Money and securities are outside, but any transaction relating to that money or securities, like lending fee, brokerage, commission for exchanging money, any commission for that, that will be liable to GST, because that is covered by the definition of service. Now, supply covers 8 terms: sale, exchange, barter, transfer, lease, license, rental, disposal. All these 8 are just examples because the law uses such as. Such as meaning these are just examples. The term supply is not defined, it is very, very wide. Consideration. Consideration can be monetary, non monetary, act or forbearance. The value of such act or forbearance will be regarded as consideration. Is GST applicable on deposits? The answer is no. Is GST applicable on advance? Yes. Government subsidy? No. Other subsidy? Yes. So careful. Advance is part of consideration. Other subsidy is also part of consideration. Government subsidy and deposit is not part of consideration. But what if deposit is adjusted as consideration? Say suppose I give a deposit and then don't pay the main money. If I don't pay the money, then he will deduct it from my deposit. The moment deposit is adjusted for supply of goods or services, automatically that adjustment becomes consideration. Okay. Then in the course or furtherance of business, the word business is very wide. Remember, it does not say ordinary course of business. It says in the course or furtherance of business. That means any activity during business or enhancing business, such activity will also be covered by this supply. Now, business is very wide. It covers wager, profession, trade, manufacture, adventure, association to member, holder of an office, central government, state government doing anything as public authorities. Because government generally does not do business, correct? Government does not do business, na? But for the purpose of GST, government is also covered by the definition of business. Any activity or transaction done by government will also be regarded as business, and that will we will see again in exemption, that government providing some services are exempt. Why is it exempt? Because it is covered by the main supply provision. Supply covers any activity by government as well. Okay. What about breach of contract? Very important point. Breach of contract is not a supply. If you break a contract, you get liquidated damages. Did you enter into a contract to break it? No, sir. I did not enter into a contract to break it. That means it is not a supply. Any liquidated damages, any compensation received due to a court order, all this will never form part of supply. Any positive agreement to do something or positive agreement not to do something will be a supply. For example, non compete fee. Say suppose we enter into an agreement that we will not enter into similar line of business, and for that there is a non compete fee which we have to pay. And in that case, we both agree not to compete in similar line of business. So that is a positive agreement. That is not breach of contract. In fact, we are entering into an agreement not to do something. Then in that case, it will be regarded as a supply. Careful. At the end, now we'll also go through the circulars. When we go through all CBIC circulars, that time I will show you this particular circular relating to breach of contract and positive agreement. Then, second point, a transaction between person other than individual and its members or constituents is also a supply. Now, they are deemed to be different persons. So, any transaction between association and members will be regarded as a supply. And this is so wide that a transaction between partnership firm and partner will also be regarded as a supply. For exams, this is relevant. There are some high court judgments which say that this provision itself is not valid because association and members are same. For examination, you go by supply because for you it is a supply. The matter at present is pending with Supreme Court. Okay. So we understood that first three conditions to be satisfied: supply, consideration in the course or furtherance of business. Then it will be liable to GST. Now let's talk about exceptions. Exceptions meaning cases where one of the conditions is not satisfied, still it will be liable to GST. Consideration missing. Say suppose consideration is missing. Can still GST apply? The answer is yes. These transactions are given in Schedule 1. Schedule 1 of CGST Act. Anything which is mentioned in the schedule, it is only because that if it was there in the main part, it would not have looked nice, and that is the reason it is shifted to a separate schedule at the end of the law. So schedule 1, schedule 2, schedule 3, there are three schedules. First let's discuss schedule 1. For transactions where GST is applicable even without consideration. That means even if consideration is missing, GST will be applicable. First one, permanent transfer of a business asset where ITC was availed. If you have availed ITC on any business asset and you permanently give it to someone else, then GST will be applicable. Now, just imagine if you have availed ITC, why did government give you ITC? So that you use it in your business. And what did you do with that? Sir, we gave it to someone else. The moment you give it to someone else free of cost, even though you give it free of cost, still GST will be applicable. Then, any transaction between related person or distinct person. Related person or distinct person will be regarded as a supply. Remember, even if it is without consideration, it should be in the course or furtherance of business. That means it should be from your stock. So, from your stock, if you give something to your related person, then it will be regarded as a supply. Now, what is related person? What is distinct person? Related person definition is very important. What does related person cover? Officers or directors in one another's business. Employer employee. Partners of a partnership firm. One controlling another. Two controlling one. One controlling two. Sole agent, sole distributor, sole concessionaire. If a person is holding 25% or more shares in two companies, then those two companies are also related persons. And lastly, family. Family, spouse, children, plus dependent grandparents, parents, brother, sister, who are wholly or mainly dependent. So remember, spouse and children are always a related person, but grandparents, parents, brother, sister, only if they are dependent on such person. Then what is distinct person? Distinct person, if two different branches are registered separately, then they are distinct person. Now it does not matter whether within the state or outside the state, if they are separately registered, that means they have different GST numbers. Separately registered meaning different GST numbers, then they are distinct persons. And second is if they are in different states. The moment they are in different states, one branch in Karnataka, one branch in Gujarat, one branch in Maharashtra, one branch in Delhi. The moment they are in different states, again distinct persons. But what is the speciality of distinct person? Distinct person always has the same pattern. Permanent account number is same. So what is distinct person, sir? Distinct person is separate registration. That means separate GST numbers or different state branches are a distinct person. So if there is a transaction between Karnataka branch and Maharashtra branch, even without consideration whether GST will be applicable, the answer is yes, GST will be applicable. Then third one is import of service. Now before reading import of service, let's understand one more part. This is not of schedule 1, this is separate. This is part of main section 7 itself. Supply consideration without being in the course or furtherance of business, can GST apply? Yes, import of service for a consideration. In fact, in the entire GST law, this is the only transaction where GST can apply without without in the course or furtherance of business. That means even if it is for personal use, it can still be regarded as a supply. And that only case is import of service for consideration. Sir, what if import of service is without consideration? If import of service is without consideration, then it should be in the course of business plus from a related person. Notice here, related person is a mandatory condition, but here, related person is not there. Be very careful, don't mix up these two things. These two are different aspects. Please don't mix it up. Be very careful on this particular aspect. Yes? Okay. Careful. Careful. Always be very careful. If import of services with consideration, is related person required to be met? No. Without consideration, is related person required to be met? Yes. Whether you will remember this properly? Yes. Okay, great. Okay. Then the last transaction of schedule 1 is principal and agent. Now principal and agent for goods, if the billing is in the name of agent. So any supply from principal to agent will be covered by schedule 1 if agent is billing to the customer in his own name. If agent is billing to the customer in his own name, then principal to agent, that transaction will be covered by schedule 1. So principal will charge GST to agent, agent will charge GST to customer. When is this possible? Only when agent has a GST number. The moment agent has a GST number, agent will bill to customer, principal will bill to agent, and the transaction of principal agent will get covered under schedule 1 because principal can never sell the goods to agent. The meaning of principal agent relationship is that the goods belong to principal, and that is the reason it is covered by schedule 1. Be very careful on this. So four transactions in schedule 1: permanent transfer of a business asset where ITC was taken. Remember, ITC condition is only there in this, nowhere else. In second one, third one, fourth one, nowhere else ITC condition is there. Only in the first case ITC condition is there. Related person, distinct person, you know it. Import of service, you know, both with consideration and without consideration. Principal and agent, principal and agent only for goods, not for services, huh? Only goods related transaction where agent is billing in his own name. Okay, now let's talk about schedule 2. See, schedule 2 is quite simple. What does schedule 2 tell us? Schedule 2 tells us classification. What is goods, what is service? That is given in schedule 2. Now, whenever there is a transfer of title getting transferred, it will be regarded as a supply of goods. Like when you transfer the property in goods, that is goods. Title can be transferred today or at a future date. Whether it is transferred today or transferred at a future date, it will be regarded as supply of goods, because the moment title is transferred, it is a supply of goods. When there is a transfer of right to use meaning renting of immovable property. See, when I give a property on rent, renting of immovable property, only right to use is given. If only right to use is given, then it will be regarded as a service or treatment or process applied on other person's goods. There are some other person's goods. I apply some treatment or process. That treatment or process which I apply, that will again be regarded as a service, because only right is given. So whenever only right in some goods is given, that is a service. Whenever title is getting transferred, it is goods. Don't forget some important ones in this. Business asset transferred, goods. Business asset private use being done, service. Business asset where a person ceases to be a taxable person, gives up his GST registration, again it will be regarded as goods. Plus, whenever it is a transaction relating to works contract, service. Restaurant, service. Transfer, temporary transfer in a intellectual property right, service. Design, development, customization of a software, service. Selling under construction property, service. Selling constructed property, negative list. We will just discuss it in some. Okay, then now let's talk about negative list. First, do you remember something? Negative list is neither supply of goods nor supply of service. That means it will never form part of aggregate turnover. Never ever does negative list form part of turnover. Be careful, don't mix negative list with seven non-taxable supplies, that alcoholic liquor ones. Those are part of turnover. Negative list is never part of turnover. Okay. Now let's see what all is covered in negative list. First is immovable property. Now, immovable property. Whenever there is a under construction property, GST will be applicable. Constructed property, no GST applicable. Sir, land is always constructed or under construction. Land cannot be constructed or under construction. Sale of land is always negative list, whether it is after leveling, before leveling, doesn't matter. It is always sale of land. Building can be under construction or constructed. Under construction will be liable to GST, constructed will not be liable to GST. Then actionable claim. Actionable claim, all actionable claims are covered by negative list except specified actionable claim. What is specified actionable claim, sir? 6 specified actionable claims. These 6 are liable to GST. What are these 6? Betting, gambling, lottery, online money gaming, horse racing, casino. So these 6 are liable to GST. Then employee providing services to employer in the course or in relation to employment. Again, this is also covered by negative list. Be careful. Gift by employer to employee up to 50,000 per year is not a supply. Then fees taken by court or tribunal. Any fees which is taken by court or tribunal will not be liable to GST. Our MPML is getting anything as member of parliament, member of state legislature, member of panchayat, not liable to GST. Constitutional persons getting anything like head of CAG or president, prime minister, all payments received by them, they are constitutional persons covered by negative list. Member of any body established by central government, state government, local authority, SEBI members or IRDA, Insurance Regulatory Development Authority members. All these members, chairpersons, any amount received is not covered by taxation. Then funeral, burial, crematorium, mortuary, including transportation of deceased. Careful, including transportation of deceased, it's covered by negative list. Alcoholic liquor license. Alcoholic liquor for human consumption is anyways there in non-taxable supply. Alcoholic liquor license is covered by negative list. Any panchayat related function under 243G of the Constitution, whether performed by central government, state government, or local authority. They performing anything that is also covered by negative list. And insurance. There are two types of insurance which are covered by negative list. First one is co-insurance. What is co-insurance, sir? Co-insurance, the share of the co-insurer which will be covered by negative list. But what is co-insurance, sir? See, two different insurance companies can come in a partnership. I mean, they are agreeing to do business together. And one person is saying, I will sell the policy to the policy holder, then I will share the premium amount, you share the risk associated with it. So the main insurer is called as the lead insurer. Lead insurer will charge to the customer. Lead insurer will charge GST on full value to the customer. What about sharing of premium from lead insurer to co-insurer? That sharing of premium is covered by negative list. But remember, this co-insurance premium is covered by negative list only if lead insurer has paid full GST on the total premium charged. If lead insurer has charged GST on this, then say suppose 40% is the sharing, then that 40% is covered by negative list. When is it covered by negative list? When lead insurer has paid full GST on the co-insurance premium. Only at that point of time it is covered. Correct? Yes. Now, what has happened? From your exams onwards, life insurance for individuals is exempted. Group insurance is taxable, but for individuals, now it is exempted. Now, when we say for individuals, now it is exempted, that means if this is exempt, then negative list relief will not be available and this will become taxable. So now co-insurance has become very, very tricky because just imagine the main insurance if it is exempt. If this becomes taxable, then the lead insurer will not get ITC on this taxable portion because it is being used for exempt. Very dangerous. But what about group insurance? See, group insurance GST will apply here, negative list co-insurance. But if main insurance is exempt, then share of co-insurance premium becomes taxable. Very, very important point for your exams. High chances that institute asks you this. How will the question come? They will give you lead insurer charging to customer. They will give you individual policies as well as group policies. Individual policies exempt, group policies taxable. And then they will give you this co-insurance data. Now this co-insurance, if GST is paid on group insurance, co-insurance is negative list, no treatment. If GST is exempted on this, then co-insurance premium taxable, but still you will not get ITC because this is exempt. Even though it is taxable, you'll have to pay GST. That GST will become a cost to the lead insurer. So it's become very dangerous now. Clear? Yes? Okay. Okay, reinsurance commission. What about reinsurance commission? Now, reinsurance commission is covered by negative list if GST is paid on reinsurance premium. If on reinsurance premium you pay full GST, then the commission charged for getting that reinsurance done, that commission will be exempted from GST. Now, again, see, individual policies are exempted. Reinsurance of individual policies is also exempt. That means individual policies, reinsurance is exempt. If reinsurance premium is exempt, then reinsurance commission will be taxable. Now let's talk about group reinsurance premium. Group policies. The employer takes group policies for employees. That is taxable. Then reinsurance commission will be exempt. Now this is again something which institute can test, because now individual insurance policies are exempt, reinsurance policies also are exempt. But if reinsurance policy is exempt, doesn't mean commission will enjoy an exemption. Okay, one mistake from my side also. This will be covered by negative list, because reinsurance premium, if this is taxable, then the commission of reinsurance is covered by negative. Just be very careful on this. Better write and keep. High chances that institute asks you this part and they mix up reinsurance premium and reinsurance commission relating to individual policies and group policies. Individual policies have a different treatment, group policies have a different treatment. Be very, very careful on this. Yes? Okay, write and keep. Anyways, I will again discuss it when I go to the amendments, plus it is also discussed in the amendment video. Okay, one last discussion in supply chapter: composite supply and mixed supply. Composite supply is where two or more goods or services are supplied in conjunction. One is a principal supply and is just naturally bundled in the ordinary course of business. In exam, these two are very important conditions. You should identify that one is a principal supply, and second, it should be naturally bundled in the ordinary course of business. Then principal supply rate will be applicable. Careful. There is no condition of single price. Single price condition is not. Single price condition is only there in mix. Single price, that means composite supply, even if the prices are separate, still it will be regarded as a composite supply. For example, laptop with laptop bag, coaching with book. Coaching is the principal supply, books is incidental supply. Mixed supply, it should not be a composite supply, and there should be a single price. Then only it is regarded as a mixed supply. And for mixed supply, which rate of GST is applicable? Highest rate of GST is applicable. So composite supply, principal supply rate will apply. Mixed supply, highest rate will be applicable. How do you identify mixed supply? It should not be a composite supply, plus there should be a single price for those two or more goods or services. Then it becomes a mixed supply. So let's quickly go through all the points which we have discussed. Okay, first, Article 265, you recall. 246, read with 7 schedule. Three lists are there. 246A, intrastate supply. 269A, interstate supply. 279A, GST Council, where central government and state government can give recommendations. Central government voting power, state government voting power. Delhi, Puducherry, Jammu and Kashmir. GSP, GST Suvidha providers. GST network. Type of tax, C plus S, C plus UT, IGST. Order of utilizing ITC, I with I with C, I with S, any order, any proportion. C with C, C with I, S with S, S with I. Then registration limit, we discussed aggregate turnover, taxable supply, exempt supply, interstate supply, export of goods or services, but does not include GST, does not include inward supply under reverse charge mechanism. It is to be checked for a financial year. For only goods, 40, 20, 10. Goods plus services or only services, 20 and 10. Exempt supply, wholly exempt, nil rated, non-taxable supply. 7 products are non-taxable supply. Alcoholic liquor for human consumption, undenatured extra neutral alcohol, 5 petroleum products. Section 9, zero rated supply, you know it very well. Export of goods or services, supply of goods or services to SEZ unit or developer for their authorized operation, meaning the operations for which they have got permission. Then section 9, charging section. 5, again charging section. 9.1, forward charge. GST is applicable on all goods or services except two products. Value, section 15, rate notified by government. 9 to 5 products, GST will apply on a later date to be notified by government on the recommendation of council. 9.3, RCM. 9.4, RCM. 9.5, for notified services supplied through e-commerce operator, ECO will be responsible to pay the tax as if he is the supplier. Even if ECO is outside India, representative has to pay. If representative is not there, appoint a person in India and pay. 5 sectors are covered as of now: transportation of passengers, restaurant, housekeeping, accommodation, local delivery. 10. Supply consideration in the course or furtherance of business. If all three conditions are satisfied, GST would be applicable. Breach of contract is not a supply. Any positive agreement to do something or not to do something, that will be liable to GST. Consideration can be monetary, non monetary, or act or forbearance. Deposit, there's no GST. Advance, GST is applicable. Government subsidy, no GST. Other subsidy, GST is applicable. Business definition very very wide, covers association to members, government, holder of office meaning holding a post, adventure, wager, betting, gambling, lottery, horse race, everything is covered under business definition. An activity or transaction between association and its members is also regarded as a supply. Then we have schedule 1, supply without consideration. If consideration is missing, still GST will apply on 4 transactions. Permanent transfer for business asset where ITC was availed. Related person, distinct person transactions. Remember, related person, remember the definition very well. Distinct person, separately registered, that is separate GST numbers, or in different states. Any of the two conditions satisfied, then it is a distinct person. Any of the two conditions satisfied, distinct person. And distinct persons have a same pan. Import of service. Import of service, if it is with consideration, no need of in the course or furtherance of business. If it is without consideration, it should be in the course or furtherance of business plus from a related person. Schedule to classification, title getting transferred regarded as goods, right to use will be regarded as a service. Then we discussed negative list, which will never form part of aggregate turnover. Be very careful. Immobile property under construction, GST is applicable. Constructed, no GST. How do you differentiate? If the full consideration is received after completion certificate or first occupancy, whichever is earlier, then it is constructed property. Actionable claim, no GST. Specified actionable claims like betting, gambling, lottery, online money gaming, horse racing, casino, GST will be applicable. Employee providing services to employer in the course of employment, no GST. Gift from employer to employee to 50,000 per year, not a supply. Fees taken by court or tribunal, no GST applicable. MP, MLA, no GST. Constitutional person, no GST. Member of any body established by central government or state government, no GST. Funeral, burial, crematorium, mortuary, including transportation of deceased, no GST. All these are services. Alcoholic liquor license, no GST. Panchayat related services performed by central government, state government, or local authority, no GST. Insurance, careful, very important point. Co-insurance premium, reinsurance commission. Co-insurance premium, the share of the co-insurer will not be liable to GST if lead insurer has paid full GST on the premium charged from the insured. Because if that is exempt, then this will not be covered under negative list. Reinsurance commission, if GST is paid on premium amount of reinsurance, then commission of reinsurance is covered by negative list. Be very careful. Individual policies now has become exempt, reinsurance premium has become exempt, so reinsurance commission will become taxable. Composite and mix supply, section 8. Composite supply, two or more goods or services supplied in conjunction. One is a principal supply, naturally bundled in the ordinary course of business. Principal supply rate will be applicable. Mix supply, two or more goods or services supplied in conjunction. These two conditions are same. Not a composite supply, single price. Single price. Then which rate will be applicable? Highest rate will be applicable. Careful. Composite supply, single price condition is not there. Even if it is different price, that is fine for composite supply, but it is not fine for mix supply. Clear? Yes. Supply related circulars, we'll go through all the circulars at the end so that we are able to again revise some important aspects of all the chapters. Okay, that's a separate PDF. Okay, now we will be moving to time of supply. Just give me 10 15 seconds. Hey, okay, so now let's move on to time of supply. Let's revise time of supply. Three important provisions. Section 12 deals with time of supply for goods. Section 13 deals with time of supply for services. Section 31 tells us the time limit to issue invoice, that is the due date to issue invoice. Remember, this is due date to issue invoice. Once we determine time of supply, based on that, we pay tax. That is due date for payment of tax. Don't mix due date for payment of tax with due date to issue invoice. Due date to issue invoice helps us to determine time of supply. And based on time of supply, we determine due date for payment of tax. For example, if the time of supply falls on 4th June, then the tax related to June has to be paid by 20th July. So, what is the end conclusion of time of supply? The end conclusion of time of supply is to determine due date for payment of tax. That is next month 20th. Now, if you are under quarterly return monthly payment, then due date of tax will be 22nd or 24th of the next month. And for first 2 months, 25th. That we will again see in quarterly return monthly payment. So this was the purpose of time of supply. Now let's learn the time of supply for services. First, time of supply for services forward charge. Forward charge, very simple. This I am sure you remember it very well. If the invoice is issued within 30 days from date of completion, invoice or payment date, whichever is earlier. And whenever we say payment in forward charge, we mean receipt of payment, because forward charge is from the angle of supplier. And in reverse charge, whenever you will find date of payment, it is date of payment, because reverse charge is from the angle of the recipient. Okay. So if the invoice is issued within 30 days from completion date, invoice or payment, whichever is earlier. If the invoice is not issued within 30 days, completion date or payment date, whichever is earlier. 45 days is used instead of 30 days for banks, financial institutions, insurance companies. Whenever there is part payment, there will be multiple time of supply. Plus, don't forget that when we talk about any particular part payment, for every part payment, you have to determine time of supply separately. Be very, very careful on that. And if you don't get time of supply from any of these provisions, then date of entry in the books of recipient will be used as time of supply, because recipient would have also entered. Sir, if that is also not available, then there is one case called as any other case. Based on that, we determine time of supply. This is forward charge. 99% of the transactions, forward charge is used. Reverse charge. Reverse charge is from the angle of recipient. Now you use three things in this. 61st day from the date of invoice issued by supplier. Supplier is required to issue invoice when he is a registered person. Because if he is a registered person, he has to issue a invoice. Or date of receipt of payment. Basically, when we say here payment, we are saying you received the payment. As a recipient, you have made the payment. So you can use date of payment or date of invoice issued by recipient. Now, when do you use this date of invoice issued by recipient? When supplier is a unregistered person, then recipient has to issue a self invoice. The day he issues the self invoice, the day he issues the self invoice, that day will be used. Careful. The day he issues a self invoice, that day will be used. Sir, is there any time limit to issue self invoice? Yes, 30 days from the receipt of goods or services. That is the time limit to issue self invoice. But careful, this time limit is not used as time of supply. If the question says that he has issued self invoice on the last date to issue self invoice, then you have to use this 30 days. Otherwise, directly this 30 days to issue the self invoice is not used, because here date of invoice is there, not due date of invoice, that is self invoice. So careful. The day recipient issues self invoice, that day you will compare it with date of payment. Better use date of payment or not date of receipt of payment, because always from supplier side he receives payment, from recipient side he makes payment, so use date of payment. Then let's talk about continuous supply of service. Continuous supply of service, how do you identify that it is a continuous supply of service? Contract should be for more than 3 months. Plus, there should be periodical payment, not periodic invoice, periodical payments. Contract is for more than 3 months, periodical payment, then it becomes a continuous supply of service. What is the time of supply? Invoice date, payment date, or due date to issue invoice. Now, this due date to issue invoice is different type. If the payment date is ascertainable from the contract, then the date mentioned in the contract. I will give you an example. If the contract says that every fifth we will have to issue a invoice. Invoice is issued on 6th and payment was made on 7th. What is the time of supply? 5th. Because the moment you write something in your contract, government uses the date which you have written in the contract and compares it with time of supply for invoice and payment, and we determine whichever is earlier. So anything which is mentioned in the contract, government wants to pick it up and use it as time of supply. That is the basic intention behind this. Now, if the payment date is not ascertainable, then date of payment, because if nothing is mentioned in the contract, date of payment, and if you compare this is date of receipt of payment, this is date of receipt of payment, it will be nothing but invoice or payment, whichever is earlier. Because if nothing is mentioned in the contract, what will government use for time of supply? If the contract says that the due date to issue invoice is based on completion of an event, like first floor completion, second floor completion, third floor completion, then date of completion of each event, that you will compare with invoice and payment, and whichever is earlier will become the time of supply. Then these some important points which we discussed, some out of it. Part payment, there will be multiple time of supply. If there is a excess payment of up to rupees 1000, excess payment to 1000, not more than 1000, excess payment up to 1000 over and above the invoice, then the time of supply for such excess payment will be next invoice date at the option of the supplier. It is at the option of the supplier. If supplier wants, he can pay tax on that based on payment. Otherwise, for such small amounts, next invoice, whenever he is raising a next invoice, that excess payment will get adjusted. That will become the time of supply. And as I said you, if time of supply is not ascertainable, then date of receipt of service, whenever it is entered in the books of recipient, That will be regarded as time of supply. Okay. So three things. Forward charge, invoice or payment, whichever is earlier, not issued within 30 days, completion or payment, whichever is earlier. Reverse charge, 61st day from date of invoice issued by supplier, date of payment or date of invoice issued by recipient. When to use A, when to use C. A will be used when supplier is registered and he is issuing invoice. B will be used when supplier is unregistered and C will be used when supplier is unregistered and recipient has to issue a self invoice. Very important area. Be very careful. Okay. Now let's talk about time of supply for goods industry. Goods industry, again, we will start with forward charge first. Due date to issue invoice or date of invoice, whichever is earlier. Now, due date to issue invoice can be three types. If the supply involves movement of those goods, due to the supply, there is movement of those goods. Then due date to issue invoice will be removal of, whenever goods are removed, that will be the due date to issue invoice. So technically, if we see, time of supply will be invoice date or removal date, whichever is earlier. If supply does not involve movement, then date of goods being made available. And this made available, you will compare with invoice date, whichever is earlier. For sale on approval basis, 6 months from the date of removal or date of acceptance date, and you will compare it with date of invoice. Careful. This 6 months is only for date of removal, not for acceptance data. From acceptance date, you don't calculate 6 months. 6 months from removal or acceptance date or invoice date. Remember, date of receipt of payment is not used as time of supply for goods forward charge. This is because of notification number 66 2017. But for composition cases and specified actionable claim cases, it will be used. That means date of payment even today is used for composition scheme and specified actionable claim. Do you recall specified actionable claim? Betting, gambling, lottery, online money gaming, casino, horse racing. These are the specified actionable claims. Okay. Then let's talk about RCM. RCM, here self invoicing is not there. It is only 31st day from the invoice issued by supplier. Sir, if supplier has not issued invoice, then you ignore 31st day. Sir, we don't have to use self invoice date. No. For goods, na self invoice date, that is self invoice issued by recipient, that is not used as a parameter for time of supply. It is only 31st day from invoice issued by supplier, compare it with date of payment, and then compare it with receipt of, because here we are talking only about receipt of good. Clear? Okay. Now, careful. Receipt of services is not used for POS for services. Be very careful. Only receipt of goods is used of supply. Continuous supply of goods. Now, how do you identify that it is a continuous supply of goods? Continuous supply of goods. First of all, the supply should be continuous in nature. Whether or not through a pipeline, through pipeline, wire or conduit, and periodic invoice. Careful. See the difference. Here the methodology is periodic invoice. Yes, whether or not the supply is through a pipeline, wire, or any other conduit. And second criteria is periodic invoice. In continuous supply of service, you have periodic payment. Here you have periodic invoice. Don't mix up both of these. Okay. Then, then continuous supply, you will compare invoice and then compare invoice with receipt of payment or statement, whichever is earlier. Certain special points. Date of payment for forward charge will be entry in the book of supplier or credit in bank of supplier, whichever is earlier. For reverse charge, it will be entry in the books of recipient or debit from the bank of recipient, because forward charge is from the angle of supplier, reverse charge is from the angle of recipient. Correct? Okay. Then interest. Interest, whenever such interest is received, that will be regarded as time of supply. Voucher, you will delete this because the time of supply for vouchers has been completely deleted from your syllabus. In fact, it is deleted from the law. Vouchers don't have a time of supply now. Sir, then if voucher question comes, see, vouchers will never have taxation. Vouchers are of two types: prepaid instruments other than prepaid instrument. If it is prepaid instrument, then it is money, and money is neither goods nor service. If it is not prepaid instrument, it is covered by actionable claim. Actionable claim is negative list. So voucher, there was no taxation at all, but still time of supply was there. That's why government has now deleted time of supply for vouchers. Okay. Then associated enterprise, which is services RCM. Associated enterprise, the time of supply will be payment date or entry or debit in the book of recipient. The day recipient records in his books, or payment date, whichever is earlier. Now, say suppose, and this is used for import of service from a related person, because when it is import of service from a related person, they become associated enterprise. Associated enterprise is defined under Income Tax Act 1961. And when we say RCM, we are talking about import of service. Any other case, any other case, if you are not able to determine time of supply by any of these, then for registered person, the time of supply will be due date for filing GST return. For unregistered person, the date of payment of GST. Careful. For registered person, due date for filing GST return. That means date on which return is to be filed, because he is required to file periodical return. Unregistered person, any other case where they are not required to file periodical return, and that will be date of payment of GST. Okay. So this was about time of supply, very small discussion, but an important chapter. It will be useful in your first question. It will be useful in case study based MCQs. It will be useful in cases where they ask you to select a date, and based on that you have to determine whether it falls under that particular month's tax liability. So be careful on that. Okay. Coming to the next discussion, our next discussion is we move on to our next discussion, which is value of supply. Very important chapter again from examination point of view. You generally get a question from value of supply, 5 marks. but sometimes institute will put some small questions in the case study based MCQs itself. Now, value of supply, which is the section number, section 15 of CGST Act, deals with value of supply. What is value of supply? It is transaction value. And what is transaction value? Price actually paid or payable for the supply if two conditions are satisfied. What are the two conditions? Price is the sole consideration. Supplier and recipient are not related persons. Because if they are related person, then you use valuation rules. Valuation rules is not in your syllabus. You will read it in CF final. Related person definition, do you remember? Officers or directors in one another's business, employer employee, partners, one controlling another, two controlling one, one controlling two, holding 25% or more shares in both of them, family, spouse, children plus dependent, grandparents, parents, brother, sister. Okay. Now, then there are some inclusions and exclusions. Inclusions will form part of value. Exclusions are not part of value. What are the inclusions? Any tax other than GST and compensation cess will form part of value. GST and compensation cess is never part of value. Then exclusion, CBIC has clarified that TCS, tax collected at source under Income Tax Act 1961, will not form part of value. Any incidental or ancillary charges like transportation charges, warehousing charges, or it could be some charges relating to special packing, payment, वजन करना, all those charges will also form part of value. Then third party payment, which is made by the recipient on behalf of supplier. So say suppose supplier had to pay to some third party, and he says, recipient, you make the payment on my behalf. Recipient also says, okay, I have to pay you, I'll pay someone else. That third party payment, which is made by the recipient on behalf of the supplier, is an additional consideration which is flowing to the supplier. Because say suppose I had to give 100 rupees to supplier, I paid 100 rupees, he had to pay 10 rupees to someone else, that 10 rupees also I paid. So for me, what is the cost? 100 rupees plus 10 rupees, 110. So GST also should apply on 110. Then interest on delayed payment of consideration for a supply. If any interest is for the main supply, then that interest will also form part of value. And if question is silent, we treat this interest as inclusive of GST. If question says all amounts are exclusive of GST, then we will treat it as exclusive of GST. But otherwise, we will treat it as inclusive of GST. So be very careful on interest. And this interest is for delayed payment of the supply. And interest always takes the characteristic of the main supply. If the main supply is taxable, interest will also be taxable. Let me test you. Say suppose interest is for alcoholic liquor for human consumption. Someone sold alcoholic liquor, the other party did not pay. As the other party did not pay, we charged interest. Whether that interest will be liable to GST? See, it will form part of value of alcohol, but whether it will be liable to GST? Correct. No. Why? Simple reason, na. Alcoholic liquor for human consumption is not liable to GST. The interest will also not be liable to GST. But will it form part of value of supply of alcohol? Obviously, yes, because any interest for delayed payment becomes part of the main supply. So whatever is the taxability of the main supply, the same will be the taxability for interest. Okay. Then pre-supply discount. Pre-supply discount is a discount which is given before the supply that will be excluded if it is known at the time of supply and ITC, and it is recorded on the invoice. It should be shown on the invoice. If it is shown on the invoice, then you reduce it. So basically, 100 is the sale price, 10 is being offered now as discount, 90. So GST will be applicable on 90. Then post supply discount. Post supply discount will also be excluded. When will it be excluded? It will be excluded when two conditions are satisfied. It should be known at the time of supply. That means there should be an agreement, plus it should be invoice wise. That means you are able to identify it. And second condition is ITC is reversed by recipient, because supplier will be allowed to reduce his output only and only when recipient has reduced its ITC. Think about this properly, because this is something which will help you to understand IDT conceptually. Whenever supplier raises an invoice, supplier collects out. Recipient, if he is registered and eligible for ITC, he will take ITC. Now, when supplier is giving a post supply discount, that means at a later point of time, that means he will reduce his output. Supplier will be allowed to reduce his output only when recipient reverses ITC. That makes sense, because when should we be allowed to reduce ITC? Only when recipient has reduced his ITC, we will get a reduction in our output. Supplier will get a reduction in output when recipient reduces his ITC. And sir, say suppose it is not known at the time of supply, or ITC is not reversed by recipient, then what will happen? Then supplier will not get a deduction in your exam. You will not give any treatment, because it will not affect value which was originally charged. See, what's the beauty of post supply discount? This discount is being given afterwards. And when you give the discount afterwards, the treatment is to be done afterwards from the original supply. So original supply you would have charged full GST. If it is not known or ITC is not reversed by recipient, supplier will not give any treatment because the condition is not satisfied. Then any subsidy which is directly linked to the price, any subsidy which is directly linked to the price, it will form part of value. But government subsidy, even if it is linked to the price, still it will not form part of value, because government subsidy is excluded for the purpose of valuation. You saw this even in the definition of consideration. Government subsidy is not considered as consideration. Any other subsidy is going to form part of value. What if a subsidy is not directly linked to the price? Nothing to be done, because only when subsidy is directly linked to the price of the goods or services, only then it forms part of value. Now let's recall and learn this summary properly. Government subsidy. You very well know that there is no GST applicable. If the question is saying already considered or net of subsidy, already considered or net of subsidy, then just ignore it. Why will you just ignore it? Because if it is already considered or it is net of subsidy, then in that case, you have already reduced it. If you have already reduced it, why will you reduce it again? That's why we ignore. If the question is saying already included in the price, that means that subsidy is included in the price. but there is no GST applicable on it. So what will you do? Deduct. Nothing given in question. Then generally institute ignores it because institute believes that if nothing is given in the question, maybe you are receiving government subsidy extra. So 10 rupees is the price, 2 rupees is government subsidy, you are receiving 12. So to 10 rupees, you will not do anything, you will just ignore it. So if nothing is given in question, institute generally ignores it. Can we write a note and do something else? Yes, but I would recommend you to do the same as institute. Other subsidy liable to GST, we are aware. If it is already considered or net of subsidy. See, you have reduced it. You have done a crime. Something which is liable to GST, you have reduced it. Now, what will you do to counter it? Add. If it is already included, then don't subtract. Don't add again because it is already included. Just ignore it. If nothing given in question, then institute regards it as an additional consideration. As it is an additional consideration, you will be careful, read this properly and go. Then pre-supply discount, post known, post not known. Let's see the treatment of all the three. Pre-supply discount, you charge GST on net, and that time only you charge GST on net. Why, sir? Because at the time of supply you know it, plus you record it on the invoice, so charge GST on net amount. Post supply discount, which is known at the time of supply. See, first you will charge GST on gross because that time you had not given the discount, though the other person is aware that he will get a discount, but initially you will charge on gross and then later give deduction for discount and you reduce your out. So you have to see the question properly. Post supply discount, if the question is relating to initial month when you are supplying, charge GST on gross. If the question is of a later month, reduce it from output. Then post supply not known. If it is not known, charge GST on gross and no deduction regarding GST later. That means no treatment was to be done for post supply not known when you are giving the discount. Okay. There's a very important circular which we will again see in the circulars part. No claim bonus. No claim bonus is when you have not filed any claim last year. Then, when you are taking the policy again from the same insurance company, he gives you a discount and he calls it as no claim bonus because last year you did not file any claim. So, we are giving you a discount in the form of no claim bonus. Now the question is whether GST will apply on 8,000 or 10,000. CBIC clarified that GST will apply on 8,000 because this no claim bonus is nothing but a discount, which is a pre-supply discount. And our department officers used to say, see, insurance company is charging GST on 8,000. We are fine with this, but insured has provided services to insurance company of not filing claim last year, so he has to pay GST on 2000. Huh? Yes. Now CBIC said no, there is no service from insured to insurance company, please understand. Who is the supplier? Insurance company. How bad it would be if you say that insured, who is the recipient, is a supplier for 2000. Some department officers used to say this, but then CBIC clarified that this 2000 will not be liable to GST, neither here nor here. So it's a discount. Discount cannot be made liable to GST. Saying insured has agreed to do something or agreeing not to do something, and for that he is getting 2000. So this was clarified by CBIC. Okay. Now we are moving on to a very, very important topic, which is place of supply. Again, in your first question, place of supply is asked in at least 2 to 3 adjustments. Plus, there can be a separate 5 mark question also on place of supply. Now, till now, whatever we have covered: introduction, supply, value, time of supply. So now let's discuss place of supply. Entire place of supply is given in IGST Act. And who makes IGST Act? It is made by the central government. So place of supply is completely controlled by central government. Now you have 5 important sections in this: 7, 8, 9, 10, 12. 7 deals with interstate supply. See the basic definition, you are aware. When the location of supplier and place of supply is in 2 different states or union territories, or 1 state and 1 union territory, then you call it as a interstate supply. Plus, there are 3 transactions which are always regarded as interstate supply. First one, when the location of supplier is in India and the place of supply is outside India. Supplier is in India, place of supply is outside India. Example: export. Supply to or by SEZ unit or developer. To or by, whether to SEZ or by SEZ, both the transactions will be covered under supply, interstate supply, because SEZ will never have C plus S for a SEZ, whether they are providing a service or they are receiving a service, they are supplying goods or receiving goods. It will always be a IGST transaction, irrespective of whether it is within the state or outside the state. Third one, in the taxable territory. Transaction is in the taxable territory and not a intrastate supply. It should not be a intrastate supply. Example: import of service. Import of service, consumption is in India, because indirect taxes are consumption based taxes. Consumption is in India and it is not a intrastate supply, because for intra, both supplier and place of supply should be in the same state. Then such transaction is also interstate supply. So 3 transactions are always interstate. Which 3 transactions? Supplier is in India, place of supply is outside India. Supply to or by SEZ unit or developer in the taxable territory, not being a intrastate supply. Okay. 8 deals with intrastate supply, which you are aware of. When the location of supplier and place of supply is in the same state or union territory. 9, territorial watch. Yeah, it will be uploaded. it will remain on you. Territorial waters. Territorial waters. See, 9 does not provide place of supply. It just says that if location of supplier or place of supply is in territorial waters, then don't keep it in waters. Bring it to the nearest coastal state. Bring it to the nearest coastal state. If the location of supplier or place of supply is in territorial waters, don't keep it in waters, bring it to the nearest coastal state. Because if it is in waters, then we will not know which state will get the revenue. And that's the reason it says bring it to the nearest coastal state. For example, if a place of supply is 5 nautical miles from Kerala and 7 nautical miles from Karnataka. See, you can't keep place of supply is in waters. Can you say place of supply is in waters? No, you can't say place of supply is in waters. That's why place of supply will be in the nearest coastal state. If something is 5 nautical miles from Kerala and 7 nautical miles from Karnataka, what will be the place of supply? Nearest coastal state is Kerala. And say, suppose, same way, some oil extraction activity is done near Maharashtra in the high sea. So, which is the nearest coastal state? Maharashtra. So, what will be location of supplier? Maharashtra. He will not take registration in waters. He will not give waters address. So it will be the nearest coastal state. Yeah, are you clear with this? So 9 does not provide any place of supply. 9 only says that if these two, which are the two important conditions, if location of supplier or place of supply is in waters, then bring it to the nearest coastal state. Okay. Then comes the main two provisions. 10, place of supply for goods, 12, place of supply for services. In inter, you have only domestic transactions, you don't have international transactions. So you learn goods transaction, domestic transactions, services, place of supply, domestic transactions. How do you check 12? Supplier and recipient should be in India. Not supplier and place of supply. Supplier and recipient should be in India. Sir, if supplier or recipient is outside India, then it becomes section 13, which you learn at CA final. Now you learn only when supplier and recipient are in India, what will be the place of supply. So, how will we determine type of tax? See, at the initial stage, we said most important thing is to know type of tax, whether C plus S will apply or IGST will apply. That's the most important thing. How do you determine this? Location of supplier and place of supply. How do you determine place of supply? 10 or 12. 10 is for goods, 12 is for services. So first determine place of supply, then determine location of supplier, then determine type of tax. Did you understand the methodology? First, place of supply. Second, location of supplier. Third, type of tax. This is how you have to determine it even in exam. Just don't see two states and make it IGST. No, you have to determine place of supply first. Check the location of supplier. If both are in same state, C plus S. If both are in different state, IGST. That is how you determine the type of tax. Correct? Yes. Okay. So with this, let's learn 10 and 12 to see how do we determine place of supply. Let's talk about section 10 first. 10 deals with place of supply for goods. Now, there are totally 6 points which we have to learn in this. First is supply involves movement. Language is very important. Supply involves movement N1A. Now, when the supply involves movement, place of supply will be where the movement of goods terminates for delivery to the recipient. Wherever the movement terminates for delivery to the recipient, that will be regarded as supply involves movement. So, terminates. For example, if the goods are going from Bangalore to Delhi, where will be the termination? Bangalore to Delhi, it terminates in Delhi, sir. So place of supply will be Delhi. Correct? Place of supply will be Delhi. That's what the law says, where the movement of goods terminates for delivery to the recipient. Now, what if supply does not involve movement? There is no movement. Then, in that case, the location of the goods at the time of delivery to the recipient, wherever the goods are located, that will be the place of supply. Sir, how do we put that? Very, very simple. See, say suppose I am in Karnataka. I gave you a machine on rent. Now, when I gave you a machine on rent, you took it to Maharashtra. Now, renting is a service, so no use of section 10 will be based on 12 will determine place of supply. But after some time, you like the machine so much that you said, sir, please sell the machine to me. Now, machine is with you in Maharashtra. Now, I say, okay, sold to you. Did the goods move? No, goods are already with you. What will be the place of supply for this transaction? Maharashtra. Why Maharashtra? Location of the goods. Because goods are located in Maharashtra at the time of delivery to the recipient. Clear? Okay. Then one issue happened. Supply to unregistered person. Because see, unregistered persons will never give their address. Why will they not give their address, sir? See, when you go to purchase something in Kerala or Maharashtra, do you give your address? No, sir, we don't. So there was a issue. Let me explain you the issue first. Whenever there is supply to registered person himself will tell you the state. He will give you his GST number, and from GST number you can get all his details. So you will get to know whether the supply is going to involve movement or not, because movement can be caused by supplier, recipient, transporter. Anyone can do movement. But supply to unregistered person, na, we were not able to get information whether the supply is going to involve movement or not going to involve movement. So say suppose a Karnataka person purchases something in Kerala. Kerala government used to say, see, he has purchased here. We don't know whether he is taking to Karnataka or not. Kerala has to get the tax. While Karnataka used to say, see, that person is from Karnataka. Na. He will bring back the goods to Karnataka, so place of supply should be Karnataka. Karnataka should get the tax. Now, what to do in such cases? So, central government said, whenever supply is to unregistered person, check whether recipient has given his address to the supplier. If recipient gives his address to the supplier, then place of supply will be address given by the recipient. If recipient has not given the address, then place of supply will be location of the supplier. So government ended this debate with one line saying that if the recipient address is available on record of the supplier, use the address. And remember, state name is deemed to be address. If he gives a state name, that is sufficient, that is as good as a address. But if it is not available, then place of supply will be wherever the supplier is. This was 10.1 CA. And remember, 10.1 CA overrides 10.1A and 10.1 C. So whenever it is supplied to unregistered person, can you use A and C? You have to use CA. Okay. Assembly or installation. So whenever goods are getting assembled or installed, the place of supply will be where the goods are assembled or installed. Wherever the goods are assembled or installed, that will be regarded as place of supply. Goods supplied on board of a conveyance. Some goods which are sold while goods are being kept in the vehicle keeps moving. So what will be the place of supply? The law says where the goods were taken on board of the conveyance. Basically, the law is saying where the goods were loaded in such conveyance. The moment goods are loaded in such conveyance, that will be regarded as place of supply. Okay. Last one, build to ship good. 10.1B. But be careful. 10.1B, build to ship good transaction. We are talking about billing done to one person, goods being shipped to other person. Place of supply will be the person to whom you have billed, because he is the person who is going to pay for it. As he is the person who is going to pay for it, that will be regarded as the place of supply. Are you clear with this? Yes. So wherever the billing is done, that will be regarded as place of supply. Okay. Now, this B is called as third person. Third person. So the law says principal place of business of the third person on whose direction the goods are delivered to the recipient or any other person. Mr. C can be recipient or any other person. Sir, how do we say recipient or any other person? See, sometimes B will order it and say, send it to C, then I will issue a invoice to C. In that case, C is the recipient. Other person can be where B is sending the raw material to C and saying that you please do the processing, and after processing you send me back the. In that case, when raw material is sent to Mr. C, then in that case it will be regarded as a other person, because then C is not the recipient, C is just a job worker. That time he becomes any other person. So again, see the wordings very carefully. Principal place of business of the third person. Third person is B, not C. Careful. Principal place of business of the third person on whose direction the goods were delivered to the recipient or any other person. Clear? Okay, great. Okay. Then coming to some very important circulars relating to goods transaction. Now, as I told you, B is regarded as a third person. The first transaction, that is A to B, place of supply will be B's location. Second transaction is from B to C. If B is billing to C, then place of supply will be C's location. If B is not billing it to C, that means any other person, then nothing, because then second transaction is not a supply at all. It was just sent to the third person. As it was just sent to the third person, there is no need to determine place of supply for the second transaction. Don't mix up. First transaction is always B. Second transaction depends on whether B is billing to C or not billing to C. Okay. Now CBIC has issued a very important circular that if same transaction, the same transaction is through eco and B is a unregistered person. Transaction through eco and B is a unregistered person. Then ship to address meaning C's location will be the place of supply, and they have given an instruction saying that wherever the goods are being shipped, that address should be regarded as address of recipient, because whenever it is supplied through Econa, they will always record the address, and the moment they record the address, that address which is recorded, that will be regarded as place of supply. Clear with this? That means what CBIC is technically saying is 101CA, that is supply to unregistered person, will override 101B. So 101B says this person location, but 101CA says supply to unregistered person na, wherever the goods are getting consumed, that should be the place of supply. Be very careful. Don't mix up 101B and 101CA. Whenever it is applied to unregistered person through ECO, rely on the circular and go by the delivery address, because delivery address will be regarded as place of supply. Careful. Let's revise it once again. Very important provision. 101A. Supply involves movement, where the movement of goods terminates for delivery to the recipient. 101C. Supply does not involve movement. Location of the goods at the time of delivery to the recipient. 101CA. Supply to unregistered person if address of recipient is available with the supplier. Such address, if address is not available, location of the supplier. D. Installation or assembly, where the goods were installed or assembled. Goods supplied on board of a conveyance, where the goods were taken on board. Bill to ship to transaction, principal place of business of the third person on whose direction the goods were delivered to the recipient or any other person. But remember, 101CA will override 101B. Supply through eco, goods, unregistered person, go by delivery address only. Don't go by anything else. Clear? So this was section 10. Okay. Now let's go to section 12. 12 deals with place of supply for services. Now, before I take you through the entire section 12, let me give you a small example. Say, suppose I have a friend, Mr. A, who is in Bangalore and he's a chartered accountant. Now, he is taking all his office persons to a trip to Goa. Now, he becomes recipient. Why, sir? Because he is going to pay for everything, for hotel, for trainer, for restaurant, for organization of the event, for entry fee tickets, for flight tickets. So he is going to pay for everything. So he becomes a recipient. Now you think, if the first service is accommodation, and accommodation in a Goa hotel, what will be the place of supply? Goa. Supplier is obviously hotel because A is recipient. Supplier is hotel. What will that hotel charge? C plus S. Will Mr. A of Bangalore get ITC of C plus S of Goa? The answer is no. You will learn this even in ITC chapter if it is restricted under section 38. That means if it is coming in 2B as restricted ITC, you will not get ITC. And one of the restricted ITC is C plus S of the other state. Say suppose I am in Karnataka, Goa person charging me IGST, I will get ITC. Goa person charging me C plus S, I will not get ITC. So no ITC to Mr. A for C plus S of Goa. If it was C plus S of Karnataka, I would have got ITC. Now, second service is training service. Trainer was from Goa. He is giving training on various subjects because off-site does not mean trip. Off-site means some training also. So training done in Goa. Now, do you think training is an important service? Yes, training is an important service. So what should be the place of supply? Government said if I keep training services place of supply in Goa itself, then C plus S of Goa will be charged. Recipient will not get ITC on such an important service of training because training has a long term benefit. That is the reason government said training. If the service is provided to a registered person, then place of supply will be location of the registered person, that is Mr. A's main office, Bangalore. And the moment government says this, supplier will charge IGST. Will Mr. A get ITC of IGST? The answer is yes. So that means for some services, government buries the tax in that state, while for some services, you get ITC in the recipient state. So accommodation, you are not getting ITC in the recipient state. Training, you are getting ITC. Now you think, what about restaurant? Whether restaurant government will give ITC in the recipient state. That's why for restaurant they have said place of supply will be where it is performed. And where was it performed? Goa, C plus S. Again, no ITC to Mr. A of Bangalore. But what about organizing of the event? That is event management services. Event management services. Should ITC be available? The answer is yes. Government has said if it is provided to a registered person, location of the registered person, if it is provided to a unregistered person, where the event is held, that is go. Now, admission to an event. Admission to an event. Entry fee. Entry fee. Do you think government will do RP, URP, registered person, unregistered person? No. They have said wherever the event was held, that is Goa, that will be the place of supply. On-board services, that is in flight. Say suppose some service is taken, what will be the place of supply? First scheduled point of departure and not RPURP. But these two are important services. Transportation of goods, transportation of passengers. Should ITC be available? Yes. That's why in these place of supplies, you will find two baskets that if it is provided to a registered person, location of registered person, if it is provided to unregistered person, it will be something else. And other services. Is government willing to give ITC on other services? The answer is yes. For other services, government wants to give ITC, and that's why they have said place of supply will be depending on whether the service is provided to a registered person or service is provided to a unregistered person. Okay, with this background, for some services, government is willing to transfer the ITC to the recipient state. For some services, government is not ready to transfer the ITC to the recipient state. Based on this, let's see all the place of supplies. Okay, first of all, remember when do you use section 12? You use section 12 when supplier and recipient are in India. 12.2. Generally what will be the place of supply? Generally, does government want to give ITC? Like for advertisement services, does government want to give ITC? Yes. Why not? So whenever it is provided to a registered person, location of the registered person, automatically the tax will get transferred to the state of the recipient. For an unregistered person, location of recipient, if the location of recipient is not available, then location of the supplier will be used. Immovable property, houseboat, vessel related services like hoarding taken on rent, because hoarding is a immovable property. For hoarding taken on rent, 12.3. For advertisement related services, 12.2, because that does not fall under immobile property related service. For immobile property, the place of supply will be where the immobile property is located or intended to be located. Intended to be located is for these real estate brokers, because real estate brokers na intended to be located will be used. Till now, the service has not been, sorry, the immobile property has not come into existence for that particular person. Then the loss is if the property, houseboat or vessel is outside India, location of the recipient. How smart government is. Because if the immobile property itself is outside India, then where the recipient is located, because in section 12 both supplier and recipient are in India. Correct? Okay. 12.4. 12.4 has very limited services like restaurant, outdoor catering, personal grooming, healthcare service where it is performed. So you see, for immobile property, you don't have two parts like RPURP. For restaurant, outdoor catering, personal grooming, etc., also you don't have two parts like RPURP. Training and performance appraisal, if it is provided to a registered person, location of registered person. If it is provided to an unregistered person, where the service is performed. That means for training services, does government want to give ITC? The answer is yes. It's very clear that government intends to give ITC to the state of the registered recipient. Admission to an event, where the event was held. You see, there are no two parts in this. Organization and sponsorship. If it is provided to a registered person, location of the registered person. If it is provided to an unregistered person, where the event is held. But if the event is outside India, location of the recipient will be used. Careful with organization and sponsorship. Most of the times, you remember organization very well. You forget sponsorship. Careful. Sponsorship also. Does government intend to give ITC to the recipient state if he is registered? Yes. Irrespective of where the event is held, if it is organization and sponsorship, it will be where the registered person is located. Okay. Transportation of goods. Again, two parts are there because government intends to give ITC. Registered person, location of the registered person. Unregistered person, where the goods are handed over for their transportation. What do you mean by handed over for their transportation? Where the parcel was given to the courier agency to take it somewhere else. Then we have transportation of passengers. Transportation of passengers provided to a registered person. Location of the registered person will be used. Provided to an unregistered person, where the person embarks for a continuous journey. That is starting point. And continuous journey is something which does not have any stopover. And what is stopover? Stopover is a place where a person can get down either to disembark or to shift to some other conveyance. Then it becomes a stopover. If the person is not getting down, then it is regarded as a continuous journey. On-board services, note two parts per scheduled departure point. Telecommunication. If it is fixed line where the device is installed, like DTH, direct to home service, or internet where the device is installed. Postpaid, you'll use the billing address. Prepaid, see, prepaid, if it is directly given to the consumer wherever prepayment is received. If it is through selling agents, then address of the selling agent. If a person does an online recharge, location of the recipient will be used. And in any other case, location of recipient, if location of recipient is not available, location of the supplier will be used. Then banking and stockbroking. Banking and stockbroking, it has two parts, but see the two parts very carefully. Address, no address. If address is available on record, such address will be used. If address is not available on record, location of the supplier. Be very careful on this. Insurance, again, very important for industry. Two parts are there: registered person, unregistered person. If it is provided to a registered person, go by location of registered person. If it is provided to unregistered person, address of the recipient. Advertisement to central government, state government, local authority, statutory body. Be very careful. It is advertisement to government. What about advertisement to others? Like advertisement provided to JK Shah classes, 12 to RPURP. Advertisement to others will fall under 12 to. Advertisement to government in each state by way of dissemination. That is how much ever is getting consumed in that particular state. That particular state will have the place of supply. First, go by the agreement or contract. Whatever is mentioned in the agreement or contract, that will be regarded as place of supply. If agreement or contract is silent, then divide it as may be prescribed. What is prescribed? TV, you divide the revenue for each state based on viewership. Say, suppose advertisement is done in two states, Maharashtra, Karnataka. Maharashtra viewership 2 crore, Karnataka viewership 1 crore, 2 is to 1, divided based on viewership. Newspaper based on number of editions. Radio, number of radio stations. Pamphlets, number of pamphlets distributed in each state. Hoardings, number of hoardings distributed in each state. Railways, length of track in each state, because railways has this information readily available with them. Railway ticket, number of stations. Internet, number of internet subscribers. SMS, number of telecom subscribers will be used. And then there are some IGST rules prescribed for different provisions, like for hotel. Hotel, say suppose 3 nights Mumbai, 2 nights Goa, 50,000 is the price. How will you divide it? If the breakup is not there, divide it based on number of nights. That is 30,000 Maharashtra, 20,000 Goa. Office space, say suppose 500 square feet in Mumbai, 100 square feet in Karnataka, and for a single rent, then divided based on area, 5 is to 1. Houseboat, say suppose 22 hours is spent in Kerala waters, 2 hours near Karnataka waters, number of hours as declared by the supplier. Telecom, say suppose one bill is coming for two states, Karnataka and Maharashtra, then how will you divide it? Number of points in each state. And then event. Say suppose event is held in one in Ahmedabad, one in Mumbai. So how will you divide it? Based on generally accepted accounting principles. However, you treat it in your accounting records, because you do segment wise reporting. Say suppose for segment wise reporting, you divide it in the ratio of 3 is to 2. Same 3 is to 2 ratio, you use it for determining place of supply and corresponding value. But sir, why the advertisement to government or local authority or statutory body is done this way? Because when advertisement service is given to government, government generally does not get ITC for that, because their output is normally exempt or recipient will pay. So as government does not get ITC, the states where the advertisement is shown, that state should get the revenue. Now, what is the methodology to determine that? Go by the agreement or go by the methodology is prescribed. But when it is advertisement to others, like advertisement given to JK Shah classes, then JK Shah classes is eligible for ITC. So the place of supply should be location of JK Shah classes, because JK Shah classes is a registered person. Clear? So that is the basic criteria for this. Okay. So now let's quickly go through place of supply, because it's a very, very important topic. We'll just go through place of supply once again. 7, interstate supply. 8, intrastate. 9, territorial waters. 10, POS for goods. 12, POS for services. Three transactions are always regarded as interstate supply. Location of supplier India, place of supply outside India, supply to or by SEZ unit or developer in the taxable territory, not being a intrastate supply. And what is intrastate supply? When the location of supplier and place of supply is in the same state or union territory. Territorial waters 9 says if the location of supplier or place of supply is in waters, bring it to the nearest coastal state. Then we went to 10. 10, 6 points. Supply involves movement. Wordings. You have to be very strong with the wordings, because you have to write this in the exam. Where the movement of goods terminates for delivery to the recipient. Supply does not involve movement. Location of the goods at the time of delivery to recipient. Supply to unregistered person. Address. Go by address of recipient. State name is sufficient. Not available. Location of the supplier. Assembly or installation, where the goods were assembled or installed. Onboard services, where the goods were taken on board. Bill to ship to, principal place of business of the third person on whose direction the goods were delivered to the recipient or any other person. Through e-commerce operator, be very careful. Bill to ship to transaction mixed with through e-commerce operator to unregistered person. Go by where the goods are delivered, not who has ordered the goods. Then coming to 12. Well, generally government says RPURP, but in 4 services, no RPURP. Accommodation, restaurant, admission to an event, on-board services. Accommodation, restaurant, admission, on-board services. No two. These tax will get buried in that particular state. C plus S of that state will be charged. No ITC to other state recipient. Most of the other cases, two parts are there. Like generally, RP, URP is there. RP, location of RP. URP, location of recipient. If that is not available, location of supplier. Immobile property, houseboat, vessel, where the property is located. Property outside India, location of recipient. Restaurant, outdoor catering, where it is performed. Training, RP, URP. For RP, location of RP. For URP, where it is performed. Admission, where the event was held. Organization, again you have RP, URP, where the event was held for URP. If it is event outside India, location of recipient. This is there in two parts, immobile property and this one. Transportation of goods, again you have two parts. For URP, it will be handed over. For transportation of passenger, again two parts. Embarks for a continuous journey. Onboard services, a scheduled departure point. Telecommunication, different methodologies, different ways. Prepaid, be careful on online, direct and selling agent. Banking, two parts, but not RPURP. Address, no address. Banking, stockbroking, be very careful. Insurance, again RPURP. In insurance, address is always taken. So for unregistered person, address of recipient on record of the supplier. Advertisement to government, it will go to each state by way of dissemination. And first go by the contractor agreement. Thereafter, just go by as may be prescribed. Correct. Then there are some prescribed methods for different areas, like if it is hotel accommodation, number of nights, houseboat as declared, number of hours as declared by the supplier, telecom, number of points, event, gap, and area is used for any other case of immovable property. Clear? So, what have we discussed till now? Intro, supply, value, time of supply, place of supply. So, till now, we have covered these five topics. Now, we'll take a break. We'll take a 15-minute break, and then we will come back and start with a lighter topic composition, then go ahead with exemption, RCM, ITC. We'll try to cover these topics so that we can master till ITC very well. So take a break now. Take a 15-minute break. See you soon. Welcome back. आई होप आपको मेरी आवाज क्लियरली आ रही है। यस। आगे बढ़े। विल मूव फॉरवर्ड। ओके, चलिए। नाउ लेट्स मूव ऑन टू कॉम्पोजिशन स्कीम। कॉम्पोजिशन स्कीम रिवाइज करते हैं। So basically, composition scheme is given in section 10 of CGST Act. It benefits small taxpayers where they can pay tax at a lower rate. So, who is a small taxpayer? It is defined, and the advantage which he gets is he gets to pay tax at a lower rate. Now, two schemes, 10(1) and 10(2), and second one is 10(2)A. 10(1) and 10(2), three people can claim: a manufacturer, a trader, and a restaurant service provider. Remember, you can provide other services also in 10(1) and 10(2), subject to a limit. There is a limit. To that extent, you can provide services. If your service is more than those limits, then you can go by 10(2)A. Now, restaurant service provider can provide any quantum of service, no problem, because he is not subject to this limit of quantum of services. Then, what is the preceding financial year aggregate turnover limit? For 10(1) and 10(2), 1.5 crore, 75 lakh is applicable for 8 states. Which are these 8 states? Manipur, Tripura, Nagaland, Mizoram, Meghalaya, Arunachal Pradesh, Sikkim, Uttarakhand. So if you remember Mast UP, T and P are not there, and MT and M you are aware: Manipur, Tripura, Nagaland, Mizoram. For 10(2)A, the limit is 50 lakh. Now, this is when you want to claim composition scheme. So when you want to claim composition scheme, you check preceding financial year turnover. Current year. Current year, you check to what extent you can claim composition scheme, because to this extent you can claim composition scheme. More than this, you will have to shift to regular scheme again. Up to 1.5 crore or 75 lakh, you can claim composition scheme, and here you can claim it till 50 lakh in the current financial year. So don't mix up these two things. Preceding financial year turnover limit is to check whether I am eligible for composition scheme. Current financial year turnover is to be under composition and claim the benefit of composition, because once I cross this, I will have to shift to regular scheme. Now, is there a restriction on the quantum of goods or services? Ki how much of goods or services you can provide out of this 1.5 crore or your turnover? How much can be the quantum? For goods, there is no such limit. For services, the limit is 10% of TFY turnover in a state or 5 lakh, whichever is higher. So last year turnover into 10%, compare it with 5 lakh, whichever is higher, that higher is your limit for services. If you cross that limit, then try to get 10 to A. If that is also not available, regular scheme. 10 to A. For goods or services, there is no limit. Be very careful. For either goods or services, there is no limit. So, sir, in 10 to A, that 50 lakh scheme, can I provide services as well as supply goods? The answer is yes. There is no restriction on supply of goods under 10 to A. Now, what is the rate of GST which is applicable for these schemes? For a manufacturer, the rate of GST is 1% of turnover in a state. For trader, 1% of taxable turnover in a state. Careful. That means trader gets a advantage. Trader is not required to pay on full turnover. He has to pay only on taxable turnover. Restaurant, 5% turnover in a state. Why turnover in a state is mentioned here, sir? Because you have to pay taxes state wise. You don't pay taxes all India basis. But when you have to check whether you are eligible for composition scheme, that time you check aggregate turnover limits. And for 10 to A, 6% of turnover in a state. Remember, once you are a manufacturer, then irrespective of what you are supplying, 1% will apply. Once you are a trader, irrespective of what you are supplying, goods or services, 1%. Restaurant services, 5%. So even if restaurant is providing some goods, na, still 5% will be applicable on those goods as well. And 10 to A, 6% will apply for goods being supplied, services being supplied. Now, this 1%, 5%, or 6%, can you collect it from customer? The answer is no, you cannot collect it from customer. Plus, this amount can never be treated as inclusive of GST. Even if question says that it is inclusive of GST, please don't treat it as inclusive of GST. Why? Because you cannot collect tax from customer. If you cannot collect tax from customer, how can you treat it as inclusive of GST and pay tax? So this is always exclusive of GST. Then cannot avail ITC. That means the tax paid on purchase becomes a cost. So whatever they pay on purchase as GST, that cannot be claimed as input tax credit, and the moment it cannot be claimed as input tax credit, becomes a cost. Composition to regular scheme, you can shift anytime. You have to give a stock statement within 30 days from the date of shift, and you'll be eligible for ITC on the stock, which we will see in ITC chapter. Regular to composition, it is only on 1st April, and stock, you will have to reverse ITC and you have to give a stock statement within 60 days from the date of shift. They don't issue a tax invoice, instead, they issue a bill of supply. Why do they issue a bill of supply? Because they cannot collect tax. Na? As they cannot collect tax, they cannot issue a tax invoice. Name board. Composition taxpayer should be mentioned on the name board. So wherever they put their name board, that should have composition taxpayer written. If he continues under composition scheme, even if he is not eligible, then he has to pay the differential tax along with interest. So say suppose there is a condition that you cannot do interstate supply. So if you do interstate supply, now you are not eligible. If you continue under composition scheme even after that, then you'll have to pay the differential tax because you would have paid 1%. Say suppose the rate of GSTI is 18% on that. 18 minus 1, you'll have to pay 17% tax. along with interest. Interest on loans, deposit, advances will not form part of any turnover for composition scheme. This is an advantage to Marwadi Gujarati. Marwadi Gujaratis also have one side business. They give loans, earn interest. And like for that example, anyone can give loan and earn interest, but the interest which you earn by giving loans, that will not form part of any turnover under entire composition scheme. All branches have to take composition scheme together. There cannot be a case where one branch is taking composition scheme and another branch is not taking composition scheme and continuing under regular scheme. That is not possible. All the branches have to take composition scheme together. Okay, coming to the most important part, restrictions. You cannot do interstate outward supply of goods or services. That's why all the rates which you saw are all C plus S rates. It is IGST rate is not given because you cannot do outward supply. So what if I was doing it last year? If you were doing last year, still in the answer you will write cannot take composition scheme, because you can never suggest a person to stop in his sales interstate and then go take composition. Never advise to close one of his segments of business. So interstate outward supply is not allowed. Either interstate outward supply of goods or interstate outward supply of services, both are not allowed. Then, if a person is a manufacturer of specified products, again, he cannot take composition scheme. What are these specified products? Pan masala, tobacco, ice cream, aerated water, bricks and tiles. Bricks and tiles will have fly ash bricks or aggregates, bricks of fossil meals, building blocks, and earthen or roofing tiles. If you are involved in these five specified products, you cannot take composition scheme. Remember this is for a manufacturer. If you are a trader of these, then you can still take composition scheme. A manufacturer of these products is not allowed to take composition scheme. Then person engaged in supply of non-taxable goods or services. Totally there are seven products which are there as non-taxable goods or services. What are those seven products? Alcoholic liquor for human consumption, undenatured extra neutral alcohol used for manufacture of alcoholic liquor for human consumption. Then you have petrol, high speed diesel, natural gas, aviation turbine fuel, petroleum crude. Then CTP or NRTP also cannot claim composition scheme. Casual taxable person, non-resident taxable person. Then a person engaged in supply of services through eco, where TCS is to be collected by the eco. Careful, services through eco. That means, can he supply goods through e-commerce operator? Yes, a person supplying goods through e-commerce operator, even if TCS is to be collected, he is still eligible to take composition scheme. But services through e-commerce operator, not eligible to take composition scheme. Be very careful on this aspect as well. Okay. Then, how does this entire thing work? See, say suppose we take an example of a chartered accountant. Chartered accountant will be eligible for 10 to a 50 lakh scheme. So first 20 lakh, he is not required to register only. When he starts his business, first 20 lakh, no need to register. After first 20 lakh, next 30 lakh, that is 20 to 30, he can opt for composition scheme and pay tax at a lower rate. First 20 lakh, is he required to pay any tax, sir? No tax. Then once he touches 50 lakh in that financial year, he will have to shift to regular scheme. And the moment he shifts to regular scheme, he will start paying full taxes. Clear with this? Yes. So be very careful. First 20 lakh, you are not required to. First 20 lakh, you are not required to register. So there is no question of any tax. Next 30 lakh, composition scheme, You can claim under section 10 to A and pay lower tax of 6%. Then you will shift to regular scheme. Once you shift to regular scheme, you will pay full tax. Correct? Okay. So this was about composition scheme, a fairly simple chapter, but lot of times you get a question from this. So just be a bit careful on composition scheme. Go through all these points. These points will help you to crack any question. Okay. Now we enter into your favorite chapter, exemption. Now exemption, we will cover almost all the important entries, and plus we will also cover some amendments which have happened in this life insurance sector. Individual insurance has been completely exempted, health insurance completely exempted, group insurance has been regarded as taxable, plus reinsurance of any exempted insurance will also enjoy a exemption. So big relief given to insurance sector, and it's important for your exams as well. Now coming to section 11. 11 gives the power now to central government to issue a notification exempting any goods or services. They can bring a general exemption or they can bring a special exemption. General exemption is by way of a notification, while special exemption is by way of a order which is given only in exceptional circumstances. It can be for whole of GST or part of GST. It can be conditional or it can also be unconditional. Any explanation which is inserted within 1 year, because government keeps on inserting explanation to explain some key points in the entries. Any explanation which is inserted within 1 year will have a retrospective effect. If it is after 1 year, then it will have a prospective effect. New section which was added last year, section 11A. Say suppose there is a general practice amongst the entire trade, where the entire trade of a particular product, there is a non-levy or a short levy. So entire industry, they are not paying some tax or short paying some tax, but the entire industry is doing it. Then in that case, if it's a general practice, then government can give an exemption for that non-levy or short levy under section 11A. That means this is to be given even for prior period. So basically, from prior period, you'll get a exemption. Okay. Now let's get into renting of immovable property. Now we will get into segment wise exemptions. Renting of immovable property. First three. Now there are totally three exemptions. Vacant land given for agriculture. If a vacant land is given for agriculture, then it will enjoy an exemption. What is agriculture? Agriculture means cultivation of land, including rearing of animals, except horses. Horse race is what they are primarily used for. They will not enjoy an exemption. Otherwise, vacant land given for agriculture will enjoy an exemption. Residential dwelling for use as residence, that enjoys a exemption, but when it is given to a registered person, it will become taxable, because exemption is only when residential dwelling is for residential use to a unregistered person. If it is given to a registered person, then in that case it becomes taxable, and it is taxable under reverse charge mechanism. If a proprietor is using a premise for his personal use in his personal capacity, then it will be exempt. Even if the proprietor is a registered person, doesn't matter. Proprietor using it for his personal use will enjoy a exemption. Plus, this residential dwelling for residential use is not applicable for hostels and PGs. Now, hostels and PGs got angry saying that we should also get some exemption. Now, in that case, government said, okay, I'll give you a exemption for this as well. And that exemption was given for accommodation that if minimum 90 days you are giving PG or hostel and you are charging up to 20,000 per month, then in that case, you will enjoy a exemption. Clear with this? So be very careful about accommodation. Minimum 90 days up to 20,000 per month. Both the criteria should be satisfied. Now, tell me one thing, this minimum 90 days is one person or multiple persons? One person should stay for minimum 90 days and rent should not exceed 20,000 per month. Then you will get an exemption. Then what if he is staying for 80 days and rent is 20,000? Then it will be taxable. Don't forget one general rule. Anything which is completely exempted, only then you will get the relief. If even a particular part is not getting satisfied, it will be taxable. So you be strong with the entries. If you are getting covered in the exemption entry, good. If you are not getting covered in the exemption entry, then in that case, you will be liable to GST. So you read exemptions. Anything other than that? So, okay. Yeah. Okay. So then tell me one thing, renting of a residential dwelling. Say suppose it is given to a registered person, taxable. A place given on rent for a religious premise, taxable. Because if there is no exemption, then it will be taxable. Okay. Okay. Hiring, three exemptions are there. Got it. Hiring, three exemptions are there. A bus given to a state transport undertaking enjoys an exemption. Truck given to a GTA will also enjoy an exemption. Electric bus given to a local authority will enjoy an exemption. Anything other than this will be taxable. And bus designed to carry more than 12 passengers. These are the three exemptions. There is one more relating to education. That education entry we will discuss it in some time when we are discussing education entry. Construction. Let's talk about construction. Three exemptions are there. Pure labor contract for Pradhan Mantri Awas Yojana, housing for all, will enjoy an exemption. Pure labor contract for any original work for a single residential unit except as part of a complex. That means bungalow construction will enjoy a exemption. Other than bungalow construction will be taxable because single residential unit except as part of a complex. Be careful. If it is part of a complex, then it is taxable. If it is not part of a complex, then it enjoys a exemption. But careful. Pradhan Mantri Awas Yojana, any pure labor contract, be it original works, repair, maintenance, renovation, everything, housing for all, anything. But second one should be original work. That means first time construction will enjoy an exemption. After that, exemption will not be available. Third one is infrastructure for electricity to reach farmland. Here it's not just pure labor contract, even works contract will enjoy an exemption because the wording pure labor contract is missing. Only when there is pure labor contract, that time you have to be careful that works contract will not enjoy an exemption. So till now we have discussed three. Let's see whether you recall it. Immovable property. Renting of immovable property, agriculture, vacant land given for agriculture, residential dwelling for residential purpose, except when given to a registered person, proprietor using for his personal use in his personal capacity, exempt. If it is hostel or PG, minimum 90 days up to 20,000 per month rent. Then bus given on hire to a state transport undertaking, exempt. Truck given on hire to a GTA, exempt. Electric bus given to a local authority also enjoys a exemption. Construction 3. Pure labor contract for Pradhan Mantri Awas Yojana and housing for all. Pure labor contract for bungalow constructions. Infrastructure development for electricity to reach farmland, like infrastructure development which has your electric poles, all those enjoy a exemption. Now let's talk about education entry. See, first you should know what is a education institute. There are three parts to education institute: preschool and up to higher secondary, that is till 12th standard gets covered in this first limb. Second limb, education as part of a curriculum to obtain a qualification recognized by law. Here ICAI gets covered, degree colleges gets covered. And third one is National Council for Vocational Education and Training, State Council for Vocational Training. Any course approved by these two will also be regarded as a education institute. Now, the moment you become a education institute, sir, JK Shah classes is a education institute? No, because it does not fall under these three. So for GST purposes, JK Shah classes is not a education institute because it does not fall under these three baskets. Now, the moment you qualify as an education institute, by education institute, any service provided to student, staff, faculty enjoys a exemption. Plus entrance exam which is conducted by national testing agency or any board, then they will also be regarded as an education institute for the limited purpose of entrance exam. And what about CBSE, ICSE, sir, and state boards? Yes, they are also education institute for conduct of examination. For examination they are also regarded as education institute, and national testing agency is regarded as education institute for entrance exam. Be very careful about the difference between the two. Affiliation service, see, generally when they are giving affiliation service it will be taxable, but affiliation services given to government schools will enjoy an exemption, not government colleges. Be very careful, institute can test you because this is their favorite entry. They keep testing you on this. So affiliation services to government school will enjoy an exemption. To government college will be taxable. Be very careful on this particular entry. Then coming to education institute, any purchases which they make, will they get an exemption? Now, admission or examination related service will enjoy an exemption for all the three. So any admission or examination related service, whether it is taken by preschool up to higher secondary or degree colleges or NCVET, SCVET, both will enjoy a exempt. All three will enjoy an exemption. Transportation, catering, housekeeping, security service. Transportation, catering, housekeeping service, only category 1 education institute. Which is this category 1 education institute? Preschool and up to higher secondary will enjoy an exemption. Others will not get a exemption. Okay. And then housekeeping and security should be within the education institute. Be very careful. Catering can be outside, transportation will obviously be outside, but housekeeping and security only within the education institute, then exemption will be available. And then subscription to online education journal, whether exemption will be available? Yes. For category 2 education institute, subscription to online education journal will enjoy a exemption. Is it? Yes. Okay. Then coming to renting related, there's one exemption. Say suppose school is giving a service to student, staff, faculty, transportation. This is exempt, you are aware. If they take it from a driver, that is also exempt because transportation taken by up to higher secondary is exempt. What if this driver takes a bus on hire? Government has said bus taken on hire will be exempt if it is given to a person who is providing service of transportation of student, staff, faculty to a to higher secondary education institute. So this will also enjoy a exemption. Careful. But just from school, if I change this to degree college, see how the taxability changes. Degree college providing service to student, staff, faculty, exempt. Driver giving services to a degree college, taxable. Bus given on hire, taxable. Because the exemption is only up to higher secondary and not beyond that. So just be very, very careful regarding this particular bus given on hire. It has to be given on hire to a person who is providing services of student, staff, faculty, transportation to a up to higher secondary school. Only then exemption will be available. Okay. Now we enter into one of the biggest one, that is government related services. Let's talk about government related services. Okay. Now, see, there are two parts. Any service to government, any service by government. Any service to government is generally taxable because, see, when you are providing services to government, GST will be, because you are providing services to government. Government does not want any exemption. Plus, if they take an exemption, Mr. A will not get ITC on his purchases. And second one is by government. By government, see, government knows that they are very bad at complying with the GST law. And that's why any service by government is generally exempt. So when government is giving to you, exempt. Government is taking services, taxable. Correct? Obviously, there will be exceptions. By government is generally exempt, but four services are taxable. Which are these four services? Four limbs. First one, Department of Post and Indian Railways. Department of Post and Indian Railways providing any service is taxable. But remember, any envelope or letter postcard up to, sorry, less than 10 grams by Department of Post is exempt. Plus Indian Railways, everything is taxable. But cloakroom, waiting room, platform ticket, battery operated car, these enjoy a exemption. So be careful about these two. In the taxability, there are again exemptions given. Then transportation of goods or passengers, second limit. If it is provided by government or other than government, again taxable. Aircraft or vessel related services inside or outside the port or airport, taxable. All these first three limbs are taxable under forward charge. Important word, forward charge. First three sectors, government pays the tax under forward charge. Last one, any service provided to business entity. That means we are talking about any service other than 123. Any service other than 123 provided to business entity, who will be liable to pay tax? Business entity will pay tax under reverse charge mechanism. Business entity has to pay tax under reverse charge mechanism. For example, Mumbai Police providing service to Reliance Industries. Who will pay the tax? Do you think Reliance Industries will pay the tax to Mumbai Police and Mumbai Police will pay it to government? And just imagine government department going to Reliance Industries or Mumbai Police to recover tax. Which one do you think makes sense? No, sir, we did not like that route that Mumbai police is paying taxes. And that is the reason government has said that any such service, Reliance Industries will pay the tax under reverse charge mechanism. So, who will pay the tax? Business entity will pay the tax under reverse charge mechanism. Now, see this very carefully. This taxable under reverse charge mechanism is very, very wide. Now, as this taxable under reverse charge mechanism is very, very wide, government gave lot of other exemptions. What other exemptions? Like up to 5,000, any service will enjoy an exemption. No GST. Previous financial year turnover is below registration limit, again enjoys an exemption. That means if your last year turnover is below registration limit, you will enjoy a exemption. One government to another government enjoys an exemption because both will face a difficulty in complying with the law. Individual farmers giving any service exempt, passport, visa, birth certificate, death certificate, guarantee commission, long term lease, upfront payment, ERCC, excess royalty collection contractor, a very important entry. See, it is more important for you to learn the entries. ERCC, excess royalty collection contractor. The name says that he is a collection contractor. Mining license, whenever it is given to anyone, the mining leaseholder has to pay the tax under reverse charge mechanism. If mining leaseholder has paid the tax, ERCC, who is a collection contractor, will enjoy an exemption. But if there is a shortfall, then ERCC on the shortfall has to pay tax under reverse charge mechanism. Careful on that. National permit for a goods carriage enjoys an exemption. RTI, right to information, you would have paid 10 rupees, 15 rupees for getting something from RTI, that also enjoys an exemption. Any service where total insurance premium is paid by government will also enjoy an exemption. Now, institute can test you on this. Group insurance. Say, suppose there is a group insurance. If the total premium is paid by government, then also it will enjoy an exemption. Individual insurance now are completely exempted. This is by government. Now let's talk about two government. Two government is generally taxable, but ration shop charging commission or margin enjoys a exemption. 243G to 43W, only services or composite supply where goods element does not exceed 25%. Institute had recently asked a question. They said service element does not exceed 25%. You remember that goods element should not exceed 25%, then it is exempt. That means it should be a majorly service. Only then it will enjoy a exemption. To government authority. If service is provided to government or authority, still exemption will be available. Five are there: water supply, sanitation, public health, slum improvement. If these are the services which are being provided, then exemption will be available. Otherwise, exemption will be not available. And anything which is not exempt will be exempt. Be careful on this end. Coming to transportation of goods. Transportation of goods, when it comes to inland waterways, it enjoys an exemption. But vessel is taxable. Now, what is the difference between inland waterways and vessel? Inland waterways is within the landmass of India. In Kerala, there are backwaters. Those backwaters are within the landmass. As they are within the landmass, it will enjoy a exemption. But say suppose the transaction is from Mumbai to Chennai vessel. Transportation by this will be taxable. Careful, don't mix up inland waterways with vessel. Vessel is outside, while inland waterways, as the name suggests, it is within the landmass. Inland waterways will be taxable or exempt. Exempt because inland waterways is not very developed. We have very small belts like Krishna Godavari River, Ganga, Brahmaputra. In these cases, we have inland waterways which will enjoy an exemption. All other vessel transportations like Mumbai to Chennai will be taxable. Air. Air, any transportation from outside India to India will enjoy an exemption. But India to outside India or within India, aircraft transportation of goods, that will be taxable. Be very careful on this entry. You get a question on this entry in examination. Railways will completely be taxable. There are some exemptions which I will discuss here about milk, salt, food grain, etc. Road transportation. Road courier agencies is taxable. GTA, providing service to unregistered person other than specified person, exempted. GTA to registered person or specified person will be liable to GST. Now, is there a change in the definition of GTA? The answer is yes. There is a change in definition of GTA. What is GTA now? Earlier, the definition said GTA is any person who issues a consignment note. So, the moment you are issuing a consignment note, you are a GTA. Now, they have said anyone who is doing local delivery by e-commerce operator or through e-commerce operator is not a GTA. Why did they do this? Porter, Zomato, Swiggy, all these were claiming exemption, saying that we will issue a consignment note. The moment we issue a consignment note, we become GTA, and GTA normally providing service to unregistered person exempt. GTA when they are providing service to tax a registered person or specified person, it will be covered under reverse charge mechanism. So GTA is safe from registration. To overcome this, what they did is they removed local delivery from GTA definition itself. So now, if local delivery is done, then in that case, whether GST will apply? Yes. In fact, anyone other than GTA and courier agency, this is also exempt. Here also they mentioned other than local delivery. So at present, if there is a local delivery, whether GST will be applicable, the answer is yes. Most probably you will get a question on this for local delivery because it's an amendment plus it's a very important segment for your examination. Careful on local delivery. I hope you have understood what is local delivery. Well, milk, salt, newspaper, military equipment, relief material, organic manure, food grain, agriculture produce. If these are through rail, GTA, or vessel, it is exempt. Can you see what is missing? Because they will ask you what is missing. Aircraft. Aircraft is missing. And second, courier agency. Careful. They will give you a question on milk, salt, newspaper, and they will say by aircraft. Careful. Aircraft courier agency will be taxable. Rail, GTA, and vessel will enjoy a exemption. Okay. Coming to transportation of passengers. Transportation of passengers. Bus. Stage carriage, contract carriage. What is the difference between stage carriage and contract carriage? Stage carriage are public buses which stop at each stage. People get in and people step down at each bus stop. That is called as stage carriage. Contract carriage क्या होता है? Contract carriage is pre-booked like Bangalore to Mumbai, Mumbai to Pune. That is contract carriage. So stage carriage, if it is AC, then it is taxable. Non-AC enjoys a exemption. Contract carriage, If it is for tourism, charter or hire, even if it is non-AC, then also it will be taxable. Tourism, charter or hire. Now, how do you get to know whether it is a bus for tourism? If everyone in that bus are going in a package, there are normally packages, Tirupati Darshan packages. Those Tirupati Darshan packages that will be taxable even if it is non-AC. Be careful on this segment. Auto enjoys an exemption, but remember, auto through e-commerce operator will be taxable. Rail, it is exempt, but AC or first class will be taxable. Aircraft economy class, northeastern states enjoys an exemption. Any flight starting or terminating in northeastern states will enjoy a exemption, but only for economy class, not for other than economy class. Vessel used for public transport exempt. If it is a cruise, then it will be taxable. Careful, public transport, and this is only for within India. If it is outside India, then exemption is not available. Cabs, metered cab where there is a state approved meter fixed, metered cab will enjoy an exemption. Any other cab will be taxable. Regional connectivity scheme airport, where government is paying part of the fare. This is also called as Udan, Ude Desh Ka Aam Nagrik. That is the name of the scheme, but that is not in your syllabus because it's important that you learn the regional connectivity scheme, not something which is funny. Funny will not get you marks. You'll get marks only when you know the exact provision. I know it is difficult, but you don't have a choice. You can enjoy it as a funny incident, or you can learn the law and write it clearly in the exam. Choice is always ours. So if part of the fare is paid, then that fare which is paid by government will enjoy a exemption. Tramway enjoys a exemption. Tramway is road pay rail, basically rail on road, that enjoys a exemption. Aerial tramway is used in tourism. Aerial tramway, cable car, ropeway, there is no need to give a exemption. That's why government has made it taxable. This entry is again very important. Auto, bus, cab through e-commerce operator under section 9(5) will be taxable. Auto, which is generally exempt, but if it is through e-commerce operator, then in that case it will be taxable. Bus, again, if it is through e-commerce operator, taxable even if it is non-AC. Cab, even if it is metered cab, if it is through e-commerce operator, will be liable to GST. Okay, let's talk about agriculture. Agriculture or agriculture produce. Are we here to talk about goods of agriculture? The answer is no. We are not here to talk about goods of agriculture. We are here to talk about services, because entire discussion is always of services. What is agriculture? Do we know the definition of agriculture? The answer is yes. Agriculture means cultivation of land or rearing of animals except horses. Horses not covered. Then agriculture produce. Agriculture produce is the primary produce on which some processing is done or no processing is done, which is usually done by the cultivator, and it does not change the essential characteristic of the produce. Now, tell me one thing, rice, will it be agriculture produce? Rice will not be a agriculture produce because rice undergoes processing which is not done by the cultivator. Plus, it changes its essential characteristic. As it changes its essential characteristic, it will not be a agriculture produce. But still, government has given exemptions to rice for packing, loading, unloading, warehousing of rice, which enjoys a exemption. Now talking about purchases or services taken for agriculture. If you take some services for agriculture, will that enjoy an exemption? The answer is yes. If you take any services, that will enjoy a exemption. Why? Because cultivation, harvesting, farm, transportation, commission agent, APMC, scientific research, testing of soil, training of farmers. Any of these services will enjoy a exemption. All services relating to agriculture will continue enjoying a exemption. What is APMC? Agriculture Produce Marketing Committee. Agriculture Produce Marketing Committee, they also do the same work. They take commission for having you to sell the property. Now, whatever commission they take, that commission will enjoy a exemption. Okay. Storage or warehousing related exemption for cereals, pulses, fruits, vegetables, minor forest produce. Be very careful of minor forest produce, bamboo. Bamboo, will it get an exemption? The answer is yes, you will get an exemption for bamboo. Okay. Waxing, pre-cooling, preconditioning, labeling of fruits and vegetable also enjoys a exemption because fruits and vegetables waxing, pre-cooling, preconditioning is done by companies. Now, if these are taxable, then it will increase the cost of fruits and vegetables, which is going to affect the normal persons. That's why waxing, pre-cooling, preconditioning enjoys a exemption. Healthcare service. Be very careful. Healthcare service is not exempt. Healthcare service by three people is exempt. Say suppose I being a chartered accountant, if I provide a healthcare services, then in that case it will be taxable. Healthcare services by three people are exempt. Who are these three people? Authorized medical practitioner, clinical establishment, paramedic. Authorized medical practitioner, clinical establishment, paramedic. These three providing services will enjoy a exemption. Cosmetic and plastic surgery. If it is a necessity, then it will enjoy an exemption. Luxury, taxable. Say suppose hair transplantation is done. Say suppose there is a service relating to cosmetic and plastic surgery for actor actresses, which is not a necessity, then it will be taxable. But a baby who has a cleft, like there's a defect, bond defect, and to rectify that defect some cosmetic and plastic surgery is done, whether that will enjoy an exemption? The answer is yes, that will enjoy a exemption. Ambulance service provided by any person enjoys an exemption. That means even if I am providing ambulance service, JK Shah classes providing ambulance service, anyone providing ambulance service enjoys a exemption. Veterinary clinic. Veterinary clinic enjoys an exemption. Yes, full exemption given to veterinary clinic for treating birds and animals. Now, room charges, if it is more than 5,000 per day, then it is taxable. But same room charges for ICU, CCU, NICU, or ICCU will enjoy a exemption because ICU, CCU, NICU, ICCU, these the cost is high. Plus, government does not believe that these should be taxed at any given point of time. Intensive care unit, critical care unit, neonatal intensive care unit, intensive cardiac care unit. All these four will enjoy an exemption, even if it is 10,000 per day, 15,000 per day, 20,000 per day. It does not matter. All will enjoy a exemption. Okay, coming to charity. First of all, to get charity related exemption, you have to be a charitable trust. Only when you are a charitable trust, you can get this exemption. Charitable trust is one which is registered under 12AA or 12AB of Income Tax Act. The moment you are registered in 12AA or 12AB of Income Tax Act 1961, you become a charitable trust. Now, if it is by charitable trust, then four charitable activities enjoy an exemption. What are these four charitable activities? Public health, advancement of religion, spirituality, yoga, education. Education is for more than 65 years in rural area, or fund homeless children, and preservation of environment. These four are covered by charitable activity. Anything other than these four will be taxable. So be careful. Only these four charitable activities are exempt. Two charitable trust, institute's favorite area. Whenever they want to test you na, they will give you a service that this service was provided to charitable trust. And what happens in your mind the moment you see charitable trust in the examination, you feel it is exempt. The answer is no. Two charitable trust is always taxable because the exemption is only for by charitable trust, not for two charitable trust. Old age home. Old age home charging up to 25,000 per month enjoys a exemption. Membership fee of up to 1,000 rupees per year for members of any association, any kind of association, 1,000 per year. Be careful, it is 1,000 per year, not per month. Institute will try to test you on per year versus per month on this. Then religious place where some religious ceremony is being conducted, any fee for that religious ceremony is exempted. And have you seen that near a religious place there will be some rooms, there will be some halls, there will be some shops? What about those room charges, hall charges, or shop charges? Whether that will be exempt? Law says room charges, if you charge 1,000 or more per day, taxable. All 10,000 or more per day, taxable. Shops 10,000 or more per month, taxable. This is the only entry in entire exemption chapter where exactly that amount will be taxable. Exactly 10,000, exactly 1,000 will be taxable. In all other entries, na, you will see if it is more than 5,000 per day, then it is taxable. Notice, more than 5,000 per day, then it is taxable. This entry exactly 1,000 is taxable. Careful about this entry because only entry in entire exemption chapter which has this kind of wordings. Okay. Then let's talk about art culture. Recreational activities for art and culture by an individual enjoys a exemption. For sports, if it is by a section 12 AA entity, then it will enjoy an exemption. Be careful. Earlier, art, culture, sports by anyone was exempted, but now it has to be specific. Art and culture should be by a individual. That means if I am giving art and culture training, it will enjoy an exemption. If JK Shah classes is giving art and culture training, as it is a private limited company, listed company, limited company, it will become taxable. Sports. Sports should be by a charitable trust. So if I am giving sports coaching, taxable. Taxable. If 12 AA entity is giving sports coaching, then in that case, it will enjoy an exemption. Very important entry. Rehab professionals giving any service will also enjoy a exemption. Now, these entries, you always feel that there are so many entries, but when you read the question, na, you will be able to answer it very clearly in examination whether it is exempt or taxable. If you have seen the entries, 2 to 3 times. Coming to financial sector, interest. Any interest is exempt, but credit card interest is taxable. डिस्काउंट, व्हाट इज दिस डिस्काउंट? बिल डिस्काउंटिंग में जो डिस्काउंट होता है ना, उस डिस्काउंट, दैट डिस्काउंट इज आल्सो इंटरेस्ट एंड हेंस दैट आल्सो एंजॉयज अ exemption. Any processing fee, documentation charges, bank charges, other charges, DD charges, all these will be liable to GST. Exchange of foreign currency amongst banks or authorized dealer also enjoys a exemption. And do you know Pradhan Mantri Jan Dhan Yojana? There is an account called as Basic Saving Bank Deposit Account that also enjoys a complete exemption. Plus, swiping of a card. When you swipe a card, na, there are some charges which the merchant has to pay. That is, those charges enjoy an exemption if you swipe a card up to 2000. So swiping of a card to 2000 rupees will enjoy a exemption. No GST is applicable on the charges. See, charges will apply on those charges, there will be no GST. Business facilitator or business correspondent providing services to bank enjoys a exemption, but it should be for a rural area branch. If it is for urban area branch, you will see it is covered under RCM. Agent of business facilitator or business correspondent to business facilitator or business correspondent. That means if business facilitator and business correspondent appoint agent, whatever fee they give to the agent, that is also exempt, but it should be for a rural area branch. Who is a business facilitator? Who is a business correspondent? Business facilitator is a marketing agent who helps selling banking products. Business correspondent helps to do transaction. Like in every small rural area, it is not possible to have a bank branch, and that's why what bank does is bank contacts a business correspondent. What he does is he contacts with lot of kirana stores, because every place will have a kirana store. In that kirana store, one device will be placed. You can, with one OTP, deposit some money and withdraw money from your bank account. So that work is done by business correspondent. Business correspondent earning commission, that is exempt. Agent of business correspondent earning commission, that also enjoys a exemption. Then there are other miscellaneous exemptions like toll charges. Toll charges enjoys a complete exemption. Transmission and distribution of electricity exempt, plus meter change charges, duplicate bill charges, all these ancillary services relating to transmission and distribution also enjoys a exemption. One very important entry is advocate. Advocate providing service to you meaning other than business entities. You guys are future business entities, but now today you are not business entities. So advocate providing service to all of you, exempt. Advocate providing service to business entity whose last year turnover does not exceed registration limit, this is also exempt. Advocate providing service to another advocate enjoys an exemption, but advocate to business entity whose last year turnover is more than registration limit, like Reliance Industries, then in that case Reliance Industries will pay the tax under RCM. Now this entry was working fine, but then they added one line, other than senior advocate. So firm of advocate enjoys a exemption, but senior advocate was removed. Now senior advocates got angry and filed a case in Supreme Court saying Article 14 of the Constitution, this is against principle of equality. So government brought one more exemption. Instead of deleting the word other than senior advocate, they brought another exemption saying senior advocate providing services to you all, exempt. Senior advocate to a person whose last year turnover is below registration limit, exempt. But senior advocate to Reliance Industries, taxable under RCM. Now, if you see the difference, can you see the difference between advocate and senior advocate entry? Advocate or firm of advocate has another advocate or firm of advocate exemption, but senior advocate does not have any such exemption. So, senior advocate providing services to an advocate depends on receiving advocate's last year turnover. If his last year turnover is below registration limit, exempt. If his turnover is more than registration limit, taxable under RCM. If senior advocate is directly billing to Reliance Industries, then obviously taxable under reverse charge mechanism. So it depends on who senior advocate is billing. Okay. Then this I am sure you guys remember: player, umpire, referee, team manager, coach providing service to a recognized sports body will enjoy an exemption. Only these five are player, umpire, referee, team manager, coach. What about a selector? Simple. Recognize sports body, to recognize sports body, exempt. Classical or folk, plus if it is up to 1.5 lakh and not as a brand ambassador, enjoys a exemption. You remember, this is for a performing artist. Classical or folk to 1.5 lakh, not as a brand ambassador, exempt. Entry fee up to 500 rupees, enjoys a exemption. This is for dance, circus, award functions, pageants, recognized sporting event, even other than recognized sporting event. If the entry fee is 500 per person, it enjoys a exemption. View museum, zoo, wildlife sanctuary, tiger reserve, ancient monuments, national park, any amount enjoys a exemption. Be careful between this dance, circus, award function entry versus museum, zoo entry, because museum, zoo entry, any service being provided will enjoy an exemption, doesn't matter what is the amount. Insurance policies have now been exempted. Health insurance also exempted. Group insurance policies will be taxable. Reinsurance of exempted policies is also exempt. Plus, the earlier entries like life micro insurance up to 2 lakh, that is still there. Life micro insurance more than 2 lakh will be exempt under individual insurance now. Then Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri Jeevan Jyoti Yojana, Vaya Vandana Yojana, Atal Pension Scheme, all this will continue to enjoy a exemption as was available earlier. Transfer of a going concern enjoys a exemption. Plain exemption is given. Business exhibition outside India, institute's favorite entry. If a business exhibition is held outside India, then in that case, it will enjoy a exemption. Institute has asked this multiple times. Be very careful. They will say business exhibition being held in Russia, provided to a registered person. You will start paying tax under reverse charge or fee. No, there is no tax at all. Incubati. What is a incubati? Incubati is an entrepreneur who is developing a high tech product. So, high tech product, government wanted to give some exemptions in incubation centers. So, what did they say? First 3 years, every year up to 50 lakh, you will get a exemption if your last year turnover does not exceed 50 lakh. Two conditions: you will get it for first 3 years. Second, your last year turnover should not exceed 50 lakh. Then in that case, you'll get a exemption. Artificial insemination of livestock other than horses enjoys an exemption. What is artificial insemination? Process to increase the productivity of the livestock. Matlab, after doing artificial insemination, na, more number of chickens will get produced if it is done on a chicken breed. So that enjoys a exemption, except for horses. For horses, the exemption will not be available. Then Training program. Any training program where 75% or more of the expenditure is borne by government, that will also enjoy a exemption. Residential welfare associations paying 7,500 per month as maintenance charges enjoys an exemption. More than that, entire amount will be liable to GST. Trade unions enjoy a complete exemption. No GST is applicable for trade unions. Doesn't matter amount, any amount being paid, no GST will apply. Then reimbursement received by unincorporated association from an exempt for an exempt supply is also exempt. I'll give you an example. Say suppose an association is doing a health policy for all its members, and that health policy was exempt health policy, and then they take the reimbursement from its members. The reimbursement which they take, that will also be exempt. That means if the main entry is exempt, then reimbursement of that will also enjoy a exemption. Then sporting event, sponsorship of a sporting event where a country, state, zone or district is participating, that also enjoys a plain exemption. Public libraries, fully exempt. Public convenience, fully exempt. Those uh, uh, bathrooms, etc., which are there for public convenience, enjoys an exemption. PTI, Press Trust of India, or UNI, United News of India, or independent journalist charging any fee. See, if a journalist is working with a news agency and he gets salary, then that salary is covered by negative list. Independent journalist works for different news agencies and charges a fee. That fee will also be exempt. Life micro insurance up to 2 lakh. If it is more than 2 lakh, that also will enjoy a exemption in life insurance entry, other than group. If it is group insurance, then it will be taxable. We will again discuss it when we are discussing amendments at the end. Army, Navy, Air Force group insurance enjoys a exemption. So, see, if it is Army, Navy, Air Force, or Coastal Guard group insurance, even today it enjoys a complete exemption, no GST applicable. And Deen Dayal Upadhyay Gramin Kaushalya Yojana also enjoys a exemption. So there are multiple entries, but don't think about these entries that I have to remember all these entries, or I want to recall each and every entry word by word. Then, in that case, it becomes difficult. What you do is you read the entries, you solve some questions. Once you solve some questions on exemptions, now you'll get to know whether you are able to solve the questions properly. And the moment you are able to answer exempt or taxable, that will be sufficient for this exemption chapter. Yes? Okay. Okay. Let's now talk about RCM and e-commerce operator. People, ये थोड़ा बहुत important है, थोड़ा ध्यान देना. RCM and e-commerce operator. There are three segments: 93, 94, 95. 93. Who is liable to pay tax in 93? Supplier or recipient? Recipient. 94. Who is liable to pay tax? Recipient. 95. Who is liable to pay tax? E-commerce operator. ध्यान दे दो, ध्यान दे दो. Concentrate, people. 93, recipient will pay the tax. 94, recipient will pay the tax. 95, Eco will pay the tax as if he is the supplier. Barabar? Okay. If it is not under RCM, then it is covered by forward charge. Why is this so important? Because हम लोग आरसीएम एंट्री पढ़ के जाते हैं, बट आरसीएम पढ़ने के बाद इंस्टीट्यूट गिव्स अ क्वेश्चन विच इज फॉरवर्ड चार्ज, एंड वी ट्राई टू अप्लाई आरसीएम ऑन एवरीथिंग. आई विल गिव यू वन एग्जांपल. जैसे एंट्री में लिखा हुआ है इंश्योरेंस एजेंट टू इंश्योरेंस कंपनी. Insurance agent to insurance company is RCM. Now, if the question is saying insurance agent to JK Shah classes, insurance agent providing service to JK Shah classes is not under reverse charge mechanism. That means it will be under forward charge mechanism. So apply the treatment which is applicable for forward charge mechanism. And in all these 9-3 entries, first we will take up 9-3 entries, then we will take 9-4, jo it's a very small discussion, real estate sector, and 9-5 last में discuss करेंगे eco. In all the 9-3 entries, recipient is a recipient in the taxable territory. That means if recipient is not in the taxable territory, then in that case forward charge. Please be very careful. If recipient is not in the taxable territory, then it will be covered under forward charge. Please be very careful on this. If recipient is in the taxable territory and it is covered by these, then it will be under reverse charge. Let me tell you a small story and then I will explain you all the entries. I have a friend. My friend Mr. A is a director in a music company. Now, as he became a director in a music company, he received a call from terrorist saying that we will send you upstairs. You understand upstairs. We will send you upstairs. Abhi, the company had taken residential property for his stay and also took a office. Office is a commercial property for him to sit. Now, the moment they received a call from terrorist, na, they took services of insurance agent saying that if the director dies, let the company get some insurance claim, and also took security services so that Mr. A can be protected from the terrorist. Then they took help from government and RBI. Thereafter, he used to travel in a rented cab. डर था ना कि terrorist will kill him, so he used to travel in a rented cab. And sometimes he used to hide in a GTA, goods transport agency, and go home. One day he was killed by a recovery agent. Then the company filed a case in the arbitral tribunal with the help of an advocate, but nothing happened. Finally, they sponsored an event outside India in the memory of Mr. A. And वो रिकवरी एजेंट जिसने इसको मारा, the person who killed Mr. A, that recovery agent then became an individual direct selling agent who keeps giving call, take credit card, take bank product. They keep giving calls like this. So he became an individual direct selling agent. He also started giving securities on rent, and then finally he became a business facilitator and business correspondent. तो उतना काम उस रिकवरी एजेंट ने किया. नाउ यू सॉ दिस स्टोरी. इतना बड़ा स्टोरी था. लेट मी अगेन टेल यू व्हाट वाज द स्टोरी. मिस्टर ए was a director in a music company. He took a residential property. The company took a residential property on rent. The company took a commercial property on rent. He received a call from terrorist that we will kill you. Then the company hired insurance agent and security services. Terrorist का मामला था तो they took help from government and RBI. He used to travel in a rented cab and sometimes ride in a truck and go home. One day he was killed by a recovery agent. Company filed a case in the arbitral tribunal with the help of advocate. Finally, they sponsored an event outside India, and this recovery agent became an individual direct selling agent, did lending of securities, and work of a business facilitator and business correspondent. Now, what if I tell you all these are the list of entries under reverse charge mechanism? So, if you can recall this story, you will be able to remember all the entries. But please understand one thing. स्टोरेज से कुछ नहीं होता है, नहीं होता है सर, नहीं होता है. यू हैव टू नो द एंट्री completely one by one. Just remembering ki director is covered, music company composer is covered, residential property is covered, commercial property is covered, insurance agent is covered, security service is covered, government RBI is covered, cab renting, GTA, रिकवरी एजेंट, आर्बिट्रल ट्रिब्यूनल, ये सब तो याद हो जाएगा. यू आर नॉट रिक्वायर्ड टू रिमेंबर जस्ट दिस. You should know each entry in detail, and that's why it becomes a bit tricky. Because ये entries तो मैं ऐसे याद करा दूं, but this will not help you in the examination. You should exactly know that who is supplier providing service to. Only when you know the combination right, then it is reverse charge mechanism. Everything else will be forward charge. Careful, be very careful on this. Anything which is not under reverse charge mechanism will be forward charge. So, should you know in depth each entry? The answer is yes, you should know in depth each entry. And if it is not under reverse charge mechanism, it will be under forward charge. ये याद रखना अच्छे से. So based on this, let's learn each entry in detail. Yes, let's see. This story will help you to recall the main parts, but only this will not help. Let's see. Let's see each entry. Director of a body corporate providing service to a body corporate. What is a body corporate? Body corporate covers two parts, company and LLP. Careful. LLP is a partnership firm. LLP is also a body corporate. LLP is a partnership firm. LLP is also a body corporate. Only two things are covered by body corporate. Institute can test you on this particular area. They will give you a LLP. Don't get confused. LLP is still a body corporate. Then author providing services to publisher. Who will pay the tax? Publisher. Now, author has an option. Totally, there are three sectors which have an option. Three sectors have an option to pay tax under फॉरवर्ड चार्ज. उसमें से पहला जो सेक्टर है वो है ऑथर. Author has been given an option that if he wants, he can pay tax under forward charge. And if he pays tax under forward charge, he has to continue under forward charge for 1 year. Minimum 1 year he has to be under forward charge. Music composer, photographer, providing service to music company and producer. ये जो दोनों एंट्री है ना, these two entries are for temporary transfer of a intellectual property right. Temporary transfer of a intellectual property right. That means you have written a book, you have the right, that is called as IPR. You get that IPR to some other person, that is publisher, saying that आप publish करो, give me royalty. उस केस में पब्लिशर विल बी रिस्पॉन्सिबल टू पे द टैक्स. सेम वे म्यूजिक कंपोजर राइटिंग सॉन्ग्स, giving it to a music company will pay the tax under reverse charge. Photographer giving the rights, temporary rights of the photograph to the producer will pay the tax under reverse charge mechanism. Renting of a residential dwelling to a registered person, did you notice something? This is a plain entry. Supplier can be registered person or unregistered person. It does not matter whether the supplier is registered or unregistered. Residential property given to a registered person, recipient will pay the tax. Careful. Now, try to differentiate this entry with commercial property. Commercial property में गवर्नमेंट ने लिखा है other than residential dwelling. Other than residential dwelling provided by unregistered person to registered person other than composition taxpayer. Be very careful. Commercial property में combination क्या है? Supplier should be unregistered person, recipient should be registered person other than composition taxpayer, then then reverse charge, otherwise forward charge will be applicable. How do we remember this, sir? आप सोच के देखिए, which is more organized, commercial property या residential property? Commercial property is more organized. इसीलिए कमर्शियल प्रॉपर्टी में सप्लायर जब अनरजिस्टर्ड है ना, ओनली देन रिवर्स चार्ज मैकेनिज्म विल अप्लाई. Only when supplier is unregistered, only then reverse charge mechanism will. If the supplier is a registered person, then in that case it will be a case of forward charge. While residential property उतना ऑर्गेनाइज्ड नहीं है, इसीलिए रेसिडेंशियल प्रॉपर्टी में या तो वो सप्लायर रजिस्टर्ड हो या अनरजिस्टर्ड हो, गवर्नमेंट वांट्स द रेसिपिएंट टू पे द टैक्स under reverse charge mechanism. This will help you to recall a bit, but at the end of the day आपको combination थोड़ा याद रखना पड़ेगा. Residential property is a plain entry. Commercial property has 9-4 जैसा structure, that is URP to RP. ये 9-4 में नहीं आता है, careful. It is not under 9-4, but it has a structure of URP to RP. While residential property is a plain entry, it does not matter whether supplier is registered or unregistered. थोड़ा ध्यान रखना, high chances that institute tests you on this. Then, security service provided by other than body corporate. So supplier should be other than body corporate. Again, recipient should be a registered person other than composition taxpayer. Now, this other than body corporate which you see, that means if supplier is a body corporate, forward charge. This is there in 3 entries. ऐसे totally 3 entries है where if the supplier is a body corporate, then in that case it is covered under forward charge. Security service. Second one is sponsorship service. Third, renting of motor vehicle. Security, sponsorship, renting of motor vehicle. If in these three supplier is a body corporate, then forward charge, otherwise reverse charge mechanism. And renting का तो मैं आपको दिखाऊंगा, renting of motor vehicle. Specific combination has to be met. Only then it will be a case of forward charge or reverse charge. Okay, insurance agent, it's a very simple entry. Insurance agent to insurance company. It will be covered under RCM. Overseeing committee of RBI. RBI. Who is this overseeing committee? Basically, when frauds kept on increasing in India, government made a overseeing committee who will check whether loans are being given to proper persons, and that's why they made a overseeing committee. So overseeing committee में members बैठते हैं. Those members charge RBI. Now who is a better person to comply with the law? RBI. Because RCM में ना generally government shifts the liability to a stronger person. If I ask you director versus body corporate, who is strong? Sir, body corporate. Author versus publisher, who is strong? Sir, publisher is strong. Music composer versus company, music company is more strong. Insurance agent versus insurance company is more strong. So government shifts the liability on a stronger person. That is the basic objective of reverse charge mechanism, because it is easier to catch the stronger person and collect tax from a stronger person. That is the basic mentality of government. Then any service provided by government or local authority to business entity will pay the tax under RCM. But first three limbs are excluded. Renting of immobile property is also excluded. What is first three limbs? You remember अभी exemption देखे थे हम लोग. First three limbs: forward charge, Department of Post and Indian Railways, transportation of goods or passenger, aircraft or vessel, whether inside or outside the port. तो फर्स्ट थ्री लिम्स फॉरवर्ड में आता है, इसीलिए दैट इज एक्सक्लूडेड. And renting of immobile property is excluded from this. But next entry deals with renting of immobile property provided by government or local authority to a registered person. Now, can you tell me which is a wider term? बिजनेस एंटिटी ज्यादा वाइड है या रजिस्टर्ड पर्सन ज्यादा वाइड है? बिकॉज आई एंट्री के लिए ना गवर्नमेंट हैज रिटन बिजनेस एंटिटी हियर, but J entry, that is renting of immobile property, they have written registered person, which is a wider term. R business BE या registered person. Now, business entity is a wider term because business entity can be a registered business entity or a unregistered business entity. But registered person is always a registered business entity. Because if you are not a business entity, why will you even take registration? So business entity is a wider term, registered person is a narrower term. और उससे भी narrow term होता है body corporate, because body corporate only covers company and LLP. So careful on who is the recipient for each of the entries. Just be very careful on that. Then renting of motor vehicle, dangerous entry. पहले तो लिखा हुआ है other than body corporate. Then not paying tax at 12%. That means if the supplier is paying tax at 12%, forward charge. The worst part is 12% का rate अभी law में ही नहीं है. There is no 12% rate at all. But this entry even today uses not paying tax at 12%. Government I think has forgotten to amend this, बिकॉज ज़्यादा लोग वैसे भी फॉरवर्ड चार्ज का ऑप्शन नहीं लेते थे इसमें, सो दे हैव नॉट डन एनीथिंग ऑन दिस पर्टिकुलर पॉइंट. सो fuel charges should be included and the recipient should be a body corporate. That means renting of motor vehicle में specific combination should be met other than body corporate to a body corporate. Only when this combination is met, then only it will be covered under reverse charge mechanism. Careful on this. Okay. Does supplier have an option to pay tax under forward charge? Yes. Totally three sectors have an option to pay under forward charge. One, author. Second, renting of motor vehicle. And third, GTA. These three sectors have an option to pay tax under forward charge. If they want, they can pay tax under forward charge. Otherwise, reverse charge mechanism is anyways there. Now, if GTA is not exercising the option to pay tax under forward charge, who will pay the tax? Registered person or specified person. अब specified person कौन कौन से हैं? Factory, society, cooperative society, partnership firm, body corporate, and casual taxable person. These are specified persons. Then recovery agent. यहाँ से easy है. यहाँ तक entries are a bit complicated. From here it's very easy. Recovery agent to banks or NBFCs, arbitral tribunal to a business entity, advocate or senior advocate to a business entity, sponsorship service to by other than body corporate to a partnership firm or body corporate. See, I told you three places other than body corporate is used. Remember these three places very well because institute will try this. Security service, renting of motor vehicle, sponsorship service. Security, renting of motor vehicle, sponsorship service. In these three cases, if supplier is a body corporate, forward charge. If supplier is other than body corporate and the recipient criteria is met, reverse charge mechanism will apply. Then, person located in non-taxable territory, providing service to person located in taxable territory. Outside India to India, the person in India will pay the tax. Individual direct selling agent. याद रखना, if he is a body corporate direct selling agent, नहीं चलेगा. It should be an individual direct selling agent to banks or NBFCs. Lender of securities, borrower, because lending of securities में lending fee charge होता है and lenders don't know whom they are giving on rent because this happens on a portal. So इसीलिए borrowers are a better person to pay tax because they can easily pay tax under reverse charge mechanism. Business facilitator to bank and agent of business correspondent to business correspondent. Be very careful of this. Business facilitator to bank, an agent of business correspondent to business correspondent. These two are under reverse charge mechanism. Sir, what about this one? Forward charge. What about agent of business facilitator to business facilitator forward charge? बहुत ध्यान रखना, don't mix up business facilitator and business correspondent. This one is under RCM, this one is under RCM. You will get confused in the examination because institute इतना यही दिमाग लगा के करता है कि after reading everything you will anyways be like ना कौन पढ़ेगा, and then they will ask you this small point, agent of business facilitator to business facilitator. That's something which you need to be careful. देखते हैं आईटीसी तक कवर करेंगे एंड देन अभी वी हैव कवर, आई टेल यू अबाउट व्हाट वी हैव कवर्ड. एक बार लेट मी जस्ट कंप्लीट दिस. देन GTA and security services provided to government, local authority or government agency who have only taken TDS registration. There is no reverse charge mechanism applicable. That means it will be covered under forward charge. And wherever government is used in all the entries, it will include parliament, state legislature, court or tribunal. This was a very interesting point. Institute ने अभी तक पूछा नहीं है, but it's a very interesting point. Court or tribunal. Do you know court also gives property on rent? Like court के बाहर जो space रहता है ना, they give it on rent for some stalls etc. And court gets rent. वो जो रेंट मिलता है, who will pay the tax? Because there will be an ATM also in the court. So court giving on rent to HDFC Bank and HDFC Bank paying rent, that will be covered under reverse charge mechanism, because court is not going to pay under forward charge, take GST registration. nahi. It will be covered under reverse charge mechanism where HDFC Bank will pay the tax under RCM. इसीलिए गवर्नमेंट ने ये लाइन ऐड किया कि जहां भी ऊपर wherever government is mentioned, it will include parliament, state legislature, court, and tribunal. All these four will be included in the word government for entire reverse charge mechanism entries. Okay. Now, last two things in this 9.4. 9.4, only one sector is covered, real estate sector. अभी रियल एस्टेट सेक्टर गवर्नमेंट ने क्या कहा है? फर्स्ट ऑफ ऑल सप्लायर शुड बी अनरजिस्टर्ड पर्सन, रेसिपिएंट शुड बी रजिस्टर्ड पर्सन. सी व्हाट हैड हैपेंड in on 1st April 2019, the rates were reduced. Yes, we'll cover amendments also separately also, और अभी भी cover कर 1/4/2019, the GST rate on real estate was reduced. Earlier, the GST rate for other than affordable housing was 12%. Government reduced it to 5%. Home buyers were happy. Affordable housing 8% was reduced to 1%. अभी बहुत खुशी का बात था that rates were reduced. But all these came with conditions. And the condition was that builder will not get ITC on purchase. Now you think, if you don't get ITC on purchase, whatever you have paid on purchase becomes your cost. Because if you are not getting ITC on purchase, the tax paid on purchase becomes a cost. Now, you will prefer buying from registered person or unregistered person? Sir, we will prefer buying from unregistered person. That's why government added 9.4 condition for real estate sector. They said at least 80% of the purchases of input and input services should be from registered person. If there is any shortfall, then builder has to pay tax under 9.4. That means 80% of your purchases of input and input services should be from registered person. If there is a shortfall, like 75% you have purchased from registered person, what is the shortfall? 5%. On 5% of your purchases, you will have to pay tax under reverse charge mechanism as a builder. And cement and capital goods, you have to purchase only from registered person. Otherwise, you will have to pay tax under 9.4. So only one sector is covered by 9.4, and that is real estate sector. उसमें इनपुट एंड इनपुट सर्विसेज 80% टू बी परचेज फ्रॉम रजिस्टर्ड पर्सन. शॉर्टफॉल हुआ तो ऑन दैट शॉर्टफॉल यू हैव टू पे अंडर आरसीएम. सीमेंट एंड कैपिटल गुड्स, not even a single rupee you can purchase from unregistered person. If you purchase, then you will have to pay tax under reverse charge mechanism on any shortfall. This is the only entry which is there. Sir, should we remember the rates? No, not at all. These rates are just explain you how this came, but otherwise you have to read only these two things. Other than that, nothing is there in 9.4 for your syllabus. Okay, now talking about 9.5. Abhi 9.5 na, there has been one additional entry. First, let me explain you four entries which were already there. Then I will explain you the fifth entry, that is local delivery, which has been added. First, see this very carefully. There is a supplier, there is a recipient. Supplier, whether he is registered or unregistered, doesn't matter. transaction is through Ola Uber. Now who will be responsible to pay the tax? अभी सोच के देखो पहले, can we put recipient under reverse charge mechanism? No, sir, we cannot put recipient under reverse charge mechanism because he is a customer. Now, being a customer, if you have to take GST registration and pay tax under reverse charge mechanism, it will only create trouble for you. So, reverse charge mechanism was not working. Forward charge. Do you think drivers will take GST registration? नहीं sir, where will drivers take GST registration? No chance. So forward charge was also not working. अभी government was not getting tax. ना तो customer पे RCM work कर रहा है, neither forward charge is working on the supplier. So what should government do? And this sector was growing very fast, and even today it is a very growing sector. So government said, let e-commerce operator pay the tax, and that time they brought this in service tax in 2016. और वही चीज जो आप अभी जीएसटी में पढ़ते हो, this came in service tax. So in service tax they said, let the e-commerce let the e-commerce operator pay the tax. Now today it is in GST that let the e-commerce operator pay tax as if he is the supplier. अभी इसमें कवर कौन क्या क्या होता है? रेडियो टैक्सी, दैट इज जीपीएस टेक्नोलॉजी जहां यूज हो रहा है. मोटर कैब टू 6 पैसेंजर्स. मैक्सी कैब 6 to 12 passengers. Motorcycle, you know very well. Any other motor vehicle can have auto also. The only exclusion is omnibus by a company. ओमनी बस इज मोर देन 6 पैसेंजर्स. अभी वो मैक्सी कैब और ओमनी बस में थोड़ा ओवरलैप होता है, बट क्वेश्चन विल क्लियरली मेंशन वेदर इट इज ओमनी बस और मैक्सी कैब. मैक्सी कैब आए तो पुट इट अंडर 9(5). ओमनी बस बाय कंपनी आए, केयरफुल, ओमनी बस बाय कंपनी बोला है, ओमनी बस बाय बॉडी कॉर्पोरेट नहीं बोला. ओमनीबस बाय कंपनी बोला है, ओमनीबस बाय बॉडी कॉर्पोरेट नहीं बोला है. That means company registered under Companies Act 2013. So omnibus by a company, forward charge. What about omnibus by a LLP? Omnibus by a LLP will be covered under 9(5). Then supplier will not pay tax. Eco will pay the tax. Be very careful on this one aspect, and careful. It does not matter whether supplier is registered or unregistered person. Same thing is there for restaurant service. Restaurant, maybe it does not matter whether restaurant is registered or unregistered. Who will pay the tax, sir? Swiggy, Zomato will pay the tax in case of restaurant. The only exclusion is restaurant in a specified premise. अभी specified premise में अगर restaurant है, then it will be covered under forward charge. Forward charge का मतलब क्या हुआ? Who will pay the tax? Supplier will pay the tax, not the e-commerce operator. अभी specified premise क्या है? Specified premise is a big hotel where rooms are also there, and the declared tariff is more than 7,500 per day for any unit of accommodation. मतलब एक भी रूम का, even a single room let out for more than 7,500 per day, it becomes a specified premise. Example, Taj Hotel. So Taj Hotel में जो restaurant है, Taj Hotel restaurant, that restaurant will be covered under forward charge. Now, this definition is there in your ICAI module, but reality is that this definition is already deleted and a new definition is there in real life, which came on 1st April 2025. I covered this even in Jan 26 amendment video, and but institute had not covered it. तो पता नहीं है क्या पढ़ना है. I will teach you both. Better एग्जाम में आए तो you write both. Specified premise. This is the definition as per ICI module. And statutory update. There has not been the new definition being added. Now, what is the new definition? New definition में they have changed declared tariff. Declared tariff होता है before discount. They have changed declared tariff to value. Value is after discount. Value is after discount. And this value more than 7,500 per day. Any room last year. Any room last year. If for even a single room last year, if the value was more than 7,500, mandatory, you are a specified premise. Mandatory, you are a specified premise. Please be very careful. अभी बाकी दो जो है ना वो ऑप्शनल है. आई डोंट थिंक दे विल आस्क यू दिस ऑप्शनल थिंग इन एग्जाम, बट you can declare yourself as a specified premise. How will you declare this? How will you declare yourself as a specified premise? If you are providing accommodation and you give a declaration to the GST officer between 1st Jan to 31st March of preceding financial year, that from 1st April I want to be called as a specified premise, then you become a specified premise. And specified premise का advantage क्या है? I will pay the tax under forward charge as a supplier, not the e-commerce operator. This is when I am a registered person. Sir, what if I am an unregistered person and I am going to provide accommodation service? Then you can give a declaration to the GST officer within 15 days of getting acknowledgement of having filed for registration application. The moment you file registration application ना आपको एक ARN मिलेगा, application reference number. और ये जो एप्लीकेशन रेफरेंस नंबर मिलेगा, within 15 days from there you can go ahead and file a declaration that I want myself to be called as specified premise. Then also you will pay the tax under forward charge. So ये mandatory वाला अच्छे से याद रखना, that if last year even a single room is let out for more than 7,500 per day, then it becomes a specified premise. Clear? Yes. Okay. अभी accommodation and housekeeping, ये दो services में क्या है? If the supplier is liable to register, then supplier will pay tax under forward charge. If the supplier is not liable to register, then eco will pay the tax under 95. I'll give you an example. Say suppose there is a hotel room. Hotel room through Make My Trip. Customer has booked it. Now tell me, if supplier is liable to register, मतलब उसका turnover 10 lakh 20 lakh से ज़्यादा है. If supplier is liable to register, it will be under forward charge. If he is liable to register. If he is not liable to register, if he is not liable to register, then in that case, Make My Trip will pay the tax under 95. Did you understand? Room, accommodation and housekeeping. Accommodation and housekeeping में क्या देखना है? Accommodation and housekeeping में देखना है whether supplier is liable to register. If he is liable to register, he will pay the tax. If he is not liable to register, then 95 eco has to pay the tax. Don't mix this with ट्रांसपोर्टेशन ऑफ पैसेंजर एंड रेस्टोरेंट. ट्रांसपोर्टेशन एंड पैसेंजर एंड रेस्टोरेंट में हम लोग सप्लायर रजिस्टर्ड है या अनरजिस्टर्ड है देखते ही नहीं है. डायरेक्टली इको विल पे द टैक्स। एक एक्सक्लूजन है ओमनीबस बाय कंपनी और यहाँ एक्सक्लूजन है स्पेसिफाइड प्रीमाइस। एंड अकोमोडेशन एंड हाउसकीपिंग में कि चेक वेदर सप्लायर इज लायबल टू रजिस्टर और नॉट। तो डोंट मिक्स दिस इट। अब एक एंट्री जो ऐड हुआ है, क्या ऐड हुआ है? लोकल डिलीवरी थ्रू ई कॉमर्स ऑपरेटर except when the supplier is liable to register under section 22(1). That means this entry is similar to which one? This entry is similar to housekeeping and accommodation. और ये क्या है? लोकल डिलीवरी थ्रू ई कॉमर्स ऑपरेटर, पोर्टर एक्सेट्रा। पोर्टर, जोमेटो, स्विगी, स्विगी इंस्टामार्ट, ये सब जो लोकल डिलीवरी करते हैं ना, लोकल डिलीवरी में अगर सप्लायर लायबल टू रजिस्टर है देन सप्लायर विल पे द टैक्स। सप्लायर इज नॉट लायबल टू रजिस्टर then eco will have to pay tax under 9(5). So at present there are two baskets। कौन से टू बास्केट्स है सर? एक में आता है ट्रांसपोर्टेशन ऑफ पैसेंजर एंड रेस्टोरेंट। इसमें क्या होता है? इट डज नॉट मैटर वेदर supplier is registered or unregistered. And the second basket is housekeeping, accommodation, and local delivery. In this case, if the supplier is liable to register, then forward charge. If the supplier is not liable to register, then 9(5). And transportation of passenger पूरा 9(5) में आता है। Only exclusion is omnibus by company, and here the exclusion is restaurant in a specified premise. So people, you need to be very strong. I hope I have done justice to this, and now you know what is under 9(1) and what is under 9(5). And I take this a bit late because ये starting में समझाने से ना, see this is part of charge chapter which is chapter 3, but I take this a bit late because it has lot of things and understanding which I think is easier to explain after exemptions. So be very careful. Transportation of passenger and restaurant 9(5), exclusion omnibus by a company इसमें, एंड स्पेसिफाइड प्रीमाइस में रेस्टोरेंट है, वो सब फॉरवर्ड चार्ज में आ जाएगा। रूम, होटल रूम्स, सॉरी हाउसकीपिंग, अकोमोडेशन एंड लोकल डिलीवरी। हाउसकीपिंग, accommodation and local delivery directly check whether supplier is liable to register or not. Are you very clear on this? And you need to be very strong with this. हाँ, अभी तक हमने क्या क्या कवर किया है? वी हैव कवर्ड इंट्रोडक्शन, सप्लाई, टाइम ऑफ सप्लाई, वैल्यू, प्लेस ऑफ सप्लाई, exemption, RCM. These are the topics which we have covered till now. 5 minutes थोड़ा रिलैक्स कर लो, एंड देन 6:05 को we will do one last topic for today, that is ITC. So एक ITC टॉपिक आज कर लेंगे so that our computation related chapters खत्म हो जाएंगे। 6:05 5 minutes का ब्रेक लो, and then 6:05 I will start with ITC. Shall we discuss ITC? Okay. चलिए, ये लास्ट टॉपिक है आज का. We will discuss ITC and then balance topics. We will complete it tomorrow. So, in ITC, we are basically only talking about our purchases, and we call purchases as inward supply. Now, ITC is available on three things. First one, inputs. Second, capital goods. And third is input service. First, let's understand what is the meaning of input, capital goods, and input services. Input is any goods other than capital goods. Then the law says used or intended to be used in the course or furtherance of business. Careful, it says used or intended to be used. That means even if you purchase and keep, that will also be regarded as input. Correct? Okay. Then capital goods is any goods the value of which is capitalized in the books of accounts. So the moment something is capitalized in the books of accounts, that becomes capital goods. Goods are categorized into two baskets. Either they are inputs or they are capital goods. Capital goods is when it is capitalized in the books of accounts. That means we rely on accounts. If in accounts we capitalize it, then in that case, even for GST, it will be regarded as capital goods. Input service, any service. Now, when you read these three definitions, what feeling do you get? The feeling which you should get is any goods, any service used for business will be eligible as ITC. That means government is so very clear that I will give you ITC on all goods, all services. The only condition is you should use it in the course or furtherance of business. So if you use it in the course or furtherance of business, then ITC is eligible. What is input tax? First of all, input tax is always in relation to a registered person, and all the types of taxes are covered. ICSUT, you get ITC of everything. Charged to him meaning forward charge purchases, includes tax paid under RCM. So the tax which you pay under RCM, can you avail ITC of that? Yes, if conditions are satisfied, you can take ITC of that. IGST paid on import of goods. Import of goods, when you import, you pay custom duty. Custom duty has a inbuilt IGST. That IGST can also be availed as ITC. But tax paid under composition scheme is not eligible as ITC. Though composition scheme you pay from your pocket, even though you pay from your pocket, it is not eligible for ITC. Then credit of all this taken together is called as input tax credit. So input tax credit is credit of all these things taken together. Then it is called as input tax credit. Okay. Then conditions to avail ITC. From here we start with the sections. Section 16. Conditions to avail ITC. There are totally six conditions. If these six conditions are satisfied, then you can avail ITC. First, you should be in possession of a invoice, debit note, or tax payment document. Tax payment document can be a self invoice under reverse charge mechanism. It can be tax payment of reverse charge mechanism. IGST paid of import of goods में ना bill of entry होता है. That bill of entry is also a document based on which you can avail ITC. Second condition, you have received the goods or services. You have received those goods or services. Now, there has been a circular to say that if it's a X factory contract, X works contract, where from the factory it is handed over to the transporter and risk and rewards are transferred to the recipient, then in that case, the moment it is handed over to the transporter, it is as good as you have received the goods and you can take ITC. That means physical receipt of goods is not mandatory in this case. The moment transporter receives those goods on your behalf, you can avail ITC. Institute will try to test you on this. Then, subject to section 41, supplier has paid the tax to government. Supplier should have paid the tax to government. But sir, how do we check whether supplier has paid the tax or not? You don't check it immediately. Just say if the transaction is of December, you don't have to check in December or January. You have to check after the financial year, after 30th September has expired. If after the financial year 30th September till date he has not filed GSTR 3B, then you have to reverse the ITC till 30th November. Later, if he files GSTR 3B, you can re-avail ITC. This is given in section 41. Then fourth condition, you have filed a valid return. Obviously, when you file your return, only at that point of time you avail ITC. Then supplier has furnished the invoice or debit note in his GSTR1 IFF or GSTR1A and it is communicated to the recipient in his GSTR2B. So once you get the communication in GSTR2B, only then you are eligible to avail ITC. ITC is not restricted under section 38. As of now, 38 में एक ही restriction है C plus S of other state which I showed you in place of supply. गोवा में होटल बुक किया C plus S charged. Karnataka person cannot take ITC of C plus S of Goa. Then some additional points in section 16. Depreciation under section 32 should not be claimed on the GST component. If it is claimed on the GST component, ITC will not be available. If the goods are received in lots or installment, you can take ITC only on the receipt of last lot or installment. Bill to ship to transaction, once it is received by the ship to person, then the bill to person can avail ITC. 5 details which are mandatory to be mentioned on the invoice: GST number of supplier and recipient, value, GST, place of supply, and description of the goods or services. Fraud cases. If there is a fraud case and order is passed by the proper officer, PO, proper officer has passed the order, then you will not get ITC. Who will not get ITC? Fraud cases, recipient will not get ITC. What is the last date to avail ITC? 30th November after the financial year or date of filing annual return, whichever is earlier. Don't forget this 30th November after the financial year or date of filing annual return. Careful, it is date of filing annual return, not due date of filing annual. Date of filing annual return is different. Date of filing annual return is the date when you submit the annual return. The moment you submit the annual return, that day you will compare it with 30th November. Whichever is earlier, that will be regarded as last date to avail ITC. What is the due date for filing annual return? The due date for filing annual return is 31st December. So if you file the annual return on the due date, then which is early? 30th November is early. Okay. Then, if the registration is cancelled, remember one thing. If the registration is cancelled, then it will also be revoked. Once revocation happens, you understand revocation. You applied for revocation, you applied saying that my registration has been cancelled without giving an opportunity to be heard, or my registration is cancelled without looking at the documents. So officer क्या करेगा? He will revoke the registration. Once he revokes the registration, what is the last date to avail ITC? This 30th November or date of filing annual return, or 30 days from the date of order of revocation, whichever is later. क्योंकि क्या होगा, at the time when your registration was cancelled, na, the last date to avail ITC would have been over. If your last date to avail ITC is already over, then in that case, how will you avail ITC? That's why government has given 30 days from the order of revocation date. From the order of revocation date, 30 days, whichever is later. That means once you get your revocation order, within next 30 days, file the returns and avail ITC. What if recipient fails to pay consideration? I am sure you remember this. If the recipient does not pay consideration within 180 days from the date of invoice, then recipient has to reverse ITC along with interest at 18% per annum under section 50. Once recipient pays later, recipient can re-avail ITC. Three cases where this provision does not apply. Supply without consideration. This is highly asked in the examination. Related person या distinct person का transaction institute gives, and related person distinct person is covered by supply without consideration schedule 1. With schedule 1 में ना, you don't have to check 180 days. As you don't have to check 180 days, there is no necessity of reversal. So be careful on this particular point. Third party payment, you already make that third party payment to someone else. Again, no need of checking 180 days. RCM. RCM, you only pay the tax. As you only pay the tax, where is the question of reversing ITC if you don't pay consideration plus GST? GST तो वैसे भी होता ही नहीं है, because you are going to pay the GST directly to government in RCM cases. Then block credit. एक बार रिवाइज कर लो because it's very important. ITC input. What is input? Any goods other than capital goods used or intended to be used in the course or furtherance of business. Capital goods, the value of which is capitalized in the books of account. Input service, any service which is used or intended to be used in the course or furtherance of business. Input tax. Forward charge, do you get ITC? Yes. Reverse charge, do you get ITC? Yes. IGST paid on import of goods, do you get ITC? Yes. Tax paid under composition scheme, do you get ITC? No, that's not eligible. तो फॉरवर्ड और रिवर्स दोनों का आपको आईटीसी मिलता है? हाँ मिलता है. 6 conditions to avail ITC, याद करो. You are in possession of an invoice, debit note or tax payment document. You have received the goods or services. Subject to section 41, supplier has paid the tax to government. Careful. Supplier should have paid the tax to government. Fourth, valid return is filed. Fifth, supplier has furnished GSTR1, IFF or GSTR1A, and it is communicated to the recipient in his GSTR2B. Last one, ITC should not be restricted under section 38. Then depreciation. Depreciation under section 32. If you claim depreciation under section 32, No ITC. Lots or installment, you can avail ITC only after receipt of last lot or installment. Bill to ship to transaction, the moment ship to receives it, you can avail ITC. Five details which are mandatory on an invoice: GST number of supplier and recipient, value, GST, place of supply description. Fraud cases. The moment it's a fraud cases, you will not get ITC if an order is passed by proper officer. Last date to avail ITC, 30th November after the financial year or date of filing annual return, whichever is earlier. If the registration is cancelled, then you get a higher time limit. What is that higher time limit? 30th November or date of filing annual return, whichever is earlier, or 30 days from the date of order of revocation, whichever is later. Yaad rakhna, here it is whichever is earlier. That means this is a repetition of the normal time limit. And you compare that with 30 days from date of order of revocation, and whichever is later, you get ITC. Be very careful on this particular aspect because it is going to play a very important role in your examination. High chances that they ask you question on this. Where if recipient does not pay consideration plus GST within 180 days from date of invoice, recipient has to reverse ITC and interest at 18% per annum will be applicable. If recipient pays later, he can re-avail ITC. Three cases where this is not applicable: supply without consideration, third party payment, reverse charge mechanism. Supply without consideration, highly asked by institute, be very careful. Then coming to block credit. Block credit again normally question आता ही है इसमें से. Motor vehicle more than 25 cc designed to carry to 13 passengers including driver, no ITC. Aircraft or vessel, no ITC. But if it is used for three sectors, then you will get ITC. कौन सा three sectors है? Outward supply of transportation of passengers. Outward supply of transportation of passengers meaning you are using that vehicle for providing outward supply of passenger transport service. जैसे कि you are providing services of tour and travel. Outward supply of imparting motor driving skill सिखा रहे हो, that is also fine. Third, it is used for further supply of such motor vehicle. Such motor vehicle is being given on rent, then again you'll be eligible for ITC. Careful. Up to 25 cc vehicles are eligible for ITC. More than 25 cc are blocked credit and only up to 13 passenger vehicle. Sir, what if aircraft or vessel is used for transportation of goods? Eligible for ITC. Other motor vehicles which are used for transportation of goods, eligible for ITC. Special purpose vehicles, eligible. More than 13 passenger bus, eligible for ITC, no problem at all. What about repair maintenance insurance of motor vehicle, aircraft, vessel? Simple rule. If you get ITC on motor vehicle, aircraft, vessel, you will also get ITC on repair maintenance insurance. If you don't get ITC on motor vehicle, aircraft, vessel, you will not get on repair maintenance insurance. Let's see. Bus purchased by JK Shah classes, eligible. Truck purchased by JK Shah classes, eligible. Car purchased for imparting motor driving skill, eligible. Car purchased for giving on rent, eligible. No problem at all. But if it was car purchased by chartered accountant, not eligible. Repair maintenance insurance, not eligible for chartered accountant car, because if he does not get on car, he will not get on repair maintenance insurance also. Then the next one is food and beverages, outdoor catering, health service, health insurance, life insurance, renting of motor vehicle, aircraft, vessel, or cosmetic and plastic surgery. No ITC. But there are two exceptions. One, if it is used for the same category of outward supply, including composite and mixed supply. जैसे कि I purchase food, I sell food, eligible. I take healthcare service, give healthcare service, eligible. I take health insurance, give health insurance, eligible. Second one is if it is obligatory on the employer to provide it to the employee under any law for the time being in force. So if a law requires that this has to be given by the employer to employee, then again it will be eligible for ITC. Like Factories Act says if there are more than 250 employees, 250 employees, then food has to be provided. Then for that food, whether ITC will be eligible, the answer is yes. Membership of clubs, health and fitness centers, travel benefits to employees for vacation, not business purpose travel. Travel benefits for vacation, not eligible for ITC. Again, if it is obligatory on the employer to provide it to the employee, then in that case, ITC is eligible. Then, any goods or service used for personal consumption is not eligible for ITC. Say, suppose I purchase this cap for class, whether I will get ITC? No. I purchase this shirt for going for a meeting, whether I'll get ITC? No. Goods or services for personal consumption is not eligible for ITC. Then, any goods or services on which tax is paid under composition scheme. Composition scheme में जो भी टैक्स पे करेंगे क्या उसका आईटीसी मिलेगा? बिल्कुल नहीं. उस गुड्स और सर्विसेज पे मिलेगा? नो. Any goods or service purchased by NRTP. NRTP purchasing anything in India, he will not get ITC. Only goods which is imported by him, on that whatever IGST he has paid as part of custom duty, that will be eligible for ITC. Otherwise, NRTP does not get even a single rupee as ITC in India. CSR obligations. Any goods or services to meet CSR obligation is also not eligible for ITC. High chances they ask you this. Any goods lost, destroyed, stolen, written off, or disposed by way of gift or sample not eligible for ITC because you are not generating output. As you are not generating output, you will not be eligible for ITC on the same. Any tax paid under section 74. 74 is not in your syllabus, but any tax paid under section 74 is again not eligible for ITC. Very important segment, construction and works contract. Now, construction and works contract, one thing which is there is construction and works contract. Any goods or service used for construction of an immovable property, no ITC. If it is for plant and machinery, eligible. Replant and machinery, not eligible. Pipeline outside the factory, telecommunication tower, land building, other civil structure. If it is used for these three, then in that case you will not get ITC because these three are not regarded as plant and machinery. Now at present both places use plant and machinery. There is earlier one place was plant or machinery, one place plant and machinery. Now at both the places plant and machinery you get ITC. These three you don't get ITC. Repair expenditure which is debited to P&L account eligible because it is not construction. Same category of outward supply eligible. Anything which is booked as revenue expenditure will be eligible because it is not construction. If it is capitalized, then it becomes construction, then you will not get ITC. Okay, balance section 17. See, if any goods or service are used exclusively for exempt supply, सोच के देखो, something which is exclusively being used for exempt supply, whether you will get ITC. No, because you are making exempt supply, you are not paying output on that. How will government give you ITC? Exclusively used for non-business purpose, will you get ITC? No chance, because if you are using something exclusively for non-business purpose, you are not generating output. As you are not generating output, you will not get ITC. Blocked credit, obviously no. Used exclusively for taxable or zero rated supply, eligible. Exclusively is the keyword. Common credit, you don't learn it, you get proportionate ITC, that is dealt at CA final level. Banks and financial institutions. 50% of ITC they can take, balance 50% they have to reverse. But for banks, if it is a distinct percent transaction, then 100% of the ITC can be taken and cannot change for a financial year. For the entire financial year, they will have to continue with the same exercise. Okay, coming to section 18, both important है, high chances and last 4 5 exams से institute is focusing on section 18. So you also focus on section 18 very well. See, say suppose a person shifts from composition to regular scheme. Can he take ITC? Yes. First of all, he can shift anytime. Why he can shift anytime? Composition में you are paying chiller 1%. Regular scheme you will pay full tax. Government is like, I'll place a red carpet for you. Come anytime. Anytime composition to regular is allowed. And on the stock, you can avail ITC. Stock as on which day? Previous day. Previous day meaning 1 day prior to the shift. How much ITC can you take? Inputs, you can take full GST paid. Whatever was the GST paid at the time of purchase, that entire ITC is eligible. Capital goods, you get a bit less. How much will you get? Tax paid minus 5% per quarter or part of the quarter. Now, this tax paid minus 5% per quarter or part of the quarter, remember, part of the quarter is regarded as full, never restricted to part. Part of the quarter will always be regarded as full quarter. That means if I give you two dates, 11th Feb or 11th March 2026 to 4th April 2026, can you tell me how many part of the quarter or quarters are there in this? क्योंकि क्वार्टर्स फिक्स्ड है, जैन टू मार्च, अप्रैल टू जून, जुलाई टू सितंबर, अक्टूबर टू दिसंबर. So this will have two quarters. एक हो गया जैन टू मार्च, एक हो गया अप्रैल टू जून. In fact, as I know, IDT is the only law where less than 1 month can be regarded as 2 quarters. Okay. And if the amount is more than 2 lakh, then CSEMA certificate is required. Within 30 days, you have to give a stock statement. If the invoice is older than 1 year, ITC nahi milega. Basically, government wants to say if the stock is old, then in that case, you will not get ITC. Okay. Regular to composition देखते हैं. Regular to composition, can you avail ITC? Yes, regular to composition, you can avail ITC. Regular to composition, you have to reverse ITC. Sir, why can't we avail? नहीं, देखो सोच के देखो ना. Here you are paying 18%. Now you want to pay 1%. So government is going to lose a lot of taxes. The government is like, first of all, you can do this only on 1st April. And previous day, whatever stock you had on that, you will have to reverse ITC. Reverse ITC mandatory, sir? Yes. You don't have a choice. You will have to reverse ITC. Inputs, you will reverse full ITC availed. Whatever ITC you availed at the time of purchase, that full ITC you have to reverse. Now tell me, will previous criteria apply that if it is older than 1 year, no need to reverse? No. Even if it is older than 1 year, still you will have to reverse ITC. Capital goods, proportionate to remaining life of capital goods in months. What is the total life of capital goods is 5 years, and 5 years in months is 60 months. So say suppose 5 months are over. If 5 months are over, then remaining life will be 55 months. So 55 months, whatever is the ITC related to 55 months, you will have to reverse. I'll give you an example. Say suppose 60,000 was the ITC which you took. 5 months are over. So for 55 months, you'll have to reverse ITC. 55 divided by 60. And that comes to 55,000. So ITC to the extent of 55,000 will have to be reversed by you. Why? Because proportionate to remaining life. You are going to now use it only for composition scheme. As now you are going to use it only for composition scheme, government is going to get very less money out of you. So that's why they want you to reverse this entire thing. Now, if you don't have these purchase invoices, then CA certificate will be required and stock statement has to be given within 60 days. Plus, be very careful on one aspect. Even if it is older than 1 year, you will still have to reverse ITC. Then, exempt to taxable. Say, suppose you are dealing with exempt goods and taxable goods. That means you are registered already. Now, from exemption, those goods have become taxable. So, then the same thing will apply, which is applicable for composition to regular. What is applicable for composition to regular? You can avail ITC on stock. On inputs, you can avail full. On capital goods, you can avail tax paid minus 5% per quarter or part of the quarter. What about taxable product becoming exempt? Then the treatment will be same as regular to composition. Whatever was the treatment for regular to composition, same treatment will apply for taxable to exempt. Be careful. Both these points are for a registered person. That means you are already registered. What about new? New registration, if you are liable to register and you apply within 30 days, then the effective date is date when you are liable. Are you a good person if you apply within 30 days from the date when you are liable? The answer is yes, because the law says you have to apply within 30 days. And if you apply within 30 days, then the effective date of registration is date when you are liable to register. In this case, whatever is the stock on the previous day from the effective date, you will be eligible for ITC. That means, say suppose you are liable on 14th January. 13th January, whatever stock you have on that, you can avail ITC. Okay, what if I apply after 30 days? That means you have broken the requirement. Government wants you to apply within time, right? But you have applied late. If you apply late, effective date will be grant of registration whenever you get registration. And will you get ITC on stock? No way. First of all, you are applying late. You want ITC on stock? Not possible. If you voluntarily take registration, then the effective date is date of grant of registration. Will you get ITC? Yes. If you apply within 30 days and voluntary registration. These two cases, you get ITC. ITC on stock on previous day to the effective date. But remember, stock of only inputs, not of capital goods, only of inputs. Capital goods for newly registered person, you will not get ITC. After effective date, whatever you purchase, will you get ITC? Yes. See, after effective date, all three people, whether you apply within 30 days or you apply after 30 days or you take voluntary registration, in all three cases, will you get ITC for after effective date purchases? The answer is yes, you will be eligible for ITC for after effective date cases. Again, here also older than 1 year, then in that case, no ITC. More than 2 lakh, CSCMA certificate will be required, which is same as composition to regular. Now, Can you transfer the balance in e-credit ledger when there is a transfer of business? The answer is yes. If there is a transfer of business, then in that case, you can transfer the balance in e-credit ledger. But the transfer of business should be along with transfer of liabilities, and it has to be done state wise. These are the two conditions which has to be met, and thereafter you can easily transfer the balance, no problem at all. You will not face any issues. Now, coming to sale of capital goods. See, when you sell capital goods, whether GST will apply? Yes, because all the three conditions are satisfied. Supply, consideration in the course or furtherance of business. So that's why whenever you sell capital goods, GST is applicable. But what amount should you pay? The law says calculate tax on transaction value. That means sale price multiplied with tax rate, or ITC which you would have availed when you would have purchased it minus 5% per quarter or part of the quarter as depreciation. Whichever is higher, that is the amount which you will have to pay. Careful. Tax on transaction value or ITC availed minus 5% per quarter or part of the quarter, whichever is higher, that is the amount payable by you. Now, if you are selling molds, dies, jigs, fixtures as scrap, see, these don't have a life of 5 years. So that's why government has said that in these cases, you can just pay tax on transaction value. No need to do this ITC availed minus 5% per quarter or part of the quarter. You directly pay tax on transaction value. That is sufficient compliance. You don't have to do anything extra in such cases, which is quite good because these are generally used in factories and these don't have a life of 5 years. As these don't have a life of 5 years, it would not make any kind of sense if this was not mentioned in the law. So that's why this is a very good point which is kept for scrap sale for molds, dies, jigs, fixtures. Directly, you can pay tax on transaction value. So this is section 18. And circulars relating to ITC, etc., that we will cover tomorrow because all the circulars we will cover at one shot so that we can revise the entire circulars at once. Nowadays, Institute has started asking a lot of questions on circulars. Okay. Now let's quickly revise what we saw today. See, we have covered 8 topics today, from introduction, supply, time of supply, value, place of supply, exemption, RCM, and ITC. I'll give you a quick brief on what we discussed, and let's see how much you are able to recall. See, first we spoke about Article 265, no tax can be collected unless it is authorized by law. Then we moved on to 246. The lists are there: 246A, intrastate supply; 269A, interstate supply; 279A, GST Council, one third, two third. Then we moved on to type of tax: C plus S, C plus UT, IGST. Thereafter, we discussed about order of utilizing ITC: I with I with C, I with S, C with C, C with I, S with S, S with I. Thereafter, aggregate turnover, registration limit. Aggregate turnover was taxable supply, exempt supply, interstate supply, export of goods or services. Does not include GST, does not include inward supply under RCM. Registration limits: only goods, 40, 20, 10. Goods plus services or only services, 20, 10. 10 for Manipur, Tripura, Nagaland, Mizoram, 20 in goods was for Mast UP, Meghalaya, Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Puducherry. Thereafter, we moved on to the charging section. 91, 92, 93, 94, 95. 91 forward charge, 92 5 products later date, 93 reverse charge mechanism, 94 again reverse charge, 95 e-commerce operator or notified services supplied through it. 93. Do we remember? It, we had made one small story. 93. Mr. A was a director in a music company. Residential property was taken on rent for him. Commercial property was taken on rent for him. He received a call from terrorist. Insurance agents were taken. Security services. We took help from government and RBI. He used to travel in a rented cab, sometimes hide in a truck GTA. Thereafter, he was killed by a recovery agent. Company filed a case in the arbitral tribunal with the help of an advocate. They sponsored an event outside India. Individual direct selling agent, lender of securities, business facilitator to bank, agent of business correspondent to business correspondent. 9-4 real estate sector, at least 80% of input and input services to be purchased from registered person. Cement and capital goods only to be purchased from registered person. Any condition violated, recipient will have to pay tax under RCM 94. 95 5 sectors. Transportation of passenger. Exclusion omnibus by a company. Restaurant. Exclusion specified premise. Housekeeping accommodation local delivery. Housekeeping accommodation local delivery. If the supplier is liable to register, supplier will pay the tax. If the supplier is not liable to register, eco will pay the tax. Then we discussed about supply. Supply consideration in the course of furtherance of business. For transactions where GST can apply even without consideration, Schedule 1. Permanent transfer of a business asset where ITC was taken, related person, distinct person, principal and agent, goods where the billing is in the name of agent, import of service. If it is without consideration, it should be in the course of business plus from a related person. Then import of service is the only case where even if business is missing, still GST can apply. Association and members, person other than individual to its members or constituents is a supply. They are regarded as two different persons for GST law. Then we went to Schedule 2, classification, transfer of title, goods, transfer of right to use, service. Schedule 3, negative list, immobile property, under construction, constructed. We discussed about these two areas. Under construction will be regarded as liable to GST. Constructed, negative list. Actionable claim, negative list. Betting, gambling, lottery, horse racing, casino, online money gaming, taxable. Employee providing services to employer in the course of employment, negative list. Gift up to 50,000 by employer to employee, negative list. Per year, then no GST, not a supply. Then fees taken by court or tribunal, MP, MLA, constitutional person, member of body established by central government, state government. And finally, funeral, alcoholic liquor license, panchayat, insurance, co-insurance premium. If lead insurer has paid full GST on the main policy, then co-insurance premium share is exempted. Reinsurance commission is in negative list if full GST is paid on the reinsurance premium. Then we discussed composite supply and mixed supply. Composite supply, one of them is a principal supply, naturally bundled in the ordinary course of business. Then principal supply rate will be applicable. Mixed supply, it should not be a composite supply and single price. Then highest rate will be. Then we moved on to time of supply for goods, services. We discussed forward charge, reverse charge, continuous supply, interest, any other case, and associated enterprise. Be careful. Goods case, you don't use date of payment for forward charge, due date to issue invoice or date of invoice. Then goods RCM, 31st day from invoice, payment date or receipt of goods. Continuous supply of goods, invoice, payment slash statement. Services, if the forward charge, if the invoice is issued within 30 days, invoice or payment. Invoice issued after 30 days, completion or payment. 30 days is replaced by 45 days for banks, financial institution, insurance company. If there is a part payment, multiple time of supply will happen. If an excess payment of up to rupees 1000 is received, next invoice date can be used at the option of the supplier. RCM services, 61st day from invoice, payment date, or date of invoice issued by recipient in case of self invoice. When is self invoice applicable? Supplier is unregistered, then you have to issue the self invoice within 30 days of receipt of service. Careful. Continuous supply of service. More than 3 months, periodical payment. And continuous supply of service more than 3 months periodical payment, invoice payment, or due date to issue invoice. Due date to issue invoice, if it is ascertainable, payment date is ascertainable in the contract, go by the date mentioned in the contract. Not ascertainable, date of receipt of payment. Based on completion of each event will be used. Interest, when such interest is received, that is the time of supply for interest on delayed payment. Any other case, if it is a registered person, go by due date for GST return. If it is an unregistered person, date of payment of GST. Value. Value is transaction value, price actually paid or payable for the supply. GST is not liable to GST. Compensation cess is not liable to compensations GST. Any tax other than GST liable. TCS not liable. Third party payment, yes. Incidental charges, yes. Interest on delayed payment for a supply, yes. Pre supply discount excluded, and it should be recorded on the invoice. Post supply discount, post supply discount, if it is known at the time of supply and ITC is reversed by the recipient, then you will exclude it at a later date, but recipient has to reverse ITC. Be careful about this particular point. Then we move on to place of supply. Place of supply, we discuss section 7. Interstate supply. Location of supplier, place of supply are in two different states, two different union territories, one state, one union territory. Three transactions are always regarded as interstate supply. Supplier is in India, place of supply outside India. Supply to or by SEZ unit or developer in the taxable territory, not being a intrastate supply. 8 is intrastate supply. Location of supplier, place of supply in same state or union territory. 9. Territorial waters. Territorial waters, if location of supplier or place of supply is in waters, bring it to the nearest coastal state. 10. 10 deals with place of supply for goods. Supply involves movement, where the movement of goods terminates for delivery to the recipient. Supply does not involve movement, location of the goods at the time of delivery to the recipient. 10(1)(ca), supply to unregistered person. Address available, use address of the recipient. Address not available, location of the supplier. Assembly or installation, where the goods are assembled or installed. Goods supplied on board of a conveyance, where the goods were taken on board. Bill to ship to transaction, principal place of business of the third person on whose direction goods are delivered to the recipient or any other person. 12. 12 services place of supply. How do you determine services place of supply? 12 2. Generally RP, URP. RP, you know it. URP, location of recipient. If that is not available, location of supplier. 12.3. Immovable property. Immovable property, houseboat vessel, where the immovable property houseboat vessel is located or intended to be located. If the property or houseboat or vessel is outside India, then location of the recipient will be used. 12.4. Outdoor catering, restaurant, healthcare services, personal grooming, where it is performed. Training services, RP, URP. RP, you know it, URP, where it is performed. Admission to an event. where the event is held. Organization of an event, RP, URP. RP, you know it, URP, where the event is held. If the event is outside India, location of recipient. 12.8. Transportation of goods, RP, URP. RP, you know it, URP, where the goods are handed over for their transportation. Transportation of passenger, RP, location of RP. URP, embarks for a continuous journey. Onboard services, first scheduled departure point. Telecommunication, if it is fixed line where the device is installed. Postpaid, billing address will be used. Prepaid, if it is directly, then directly you use where prepayment is received. Selling agent, location of the selling agent. Online, location of recipient. Any other case, first use location of recipient. If that is not available, location of the supplier. Thereafter, we moved on to 12.12, banking and stockbroking. Banking and stockbroking, address is available, address. If address is not available, then location of the supplier. 12.13 deals with insurance. Insurance, RP, URP. For URP, address on record for the recipient. 12.14, advertisement to government. It will be in each state by way of dissemination. Every state should get its portion of tax. First go by the agreement, otherwise as may be prescribed, like for TV, viewership, hoarding, number of hoardings in each state, cinema halls, number of cinema halls, screens in each state, railways, length of track in each state. That is how you determine it. Then IGST rules has prescribed that for room rental, number of nights can be used. Other cases, area can be used. For houseboat, number of hours as declared by the supplier. That was place of supply revision. Then exemption. Exemption, we discuss section 11. Section 11 is the power to give general exemption or special exemption. 11A, if it's a general practice, then in that case, government can waive off the levy or non-levy or short levy. Then we discussed lot of services. We discussed renting of immobile property, agriculture related services, rent. Then we moved on to hiring bus given on hire to a state transport undertaking, education, three limbs of education institute. Then we went to transportation of goods, GTA to registered, GTA to unregistered person, inland waterways, transportation of passengers. Again, we spoke about auto, AC, cab, non metered cab, auto through e-commerce operator, economy class aircraft starting or terminating in northeastern state. Then we moved on to financial sector. Interest enjoys a full exemption. Business facilitator, business correspondent in rural area enjoys an exemption. Healthcare services provided by three persons: authorized medical practitioner, clinical establishment, paramedic will enjoy an exemption. Thereafter, we moved on to charity. Charity section 12AA entity 12AB. By them, four activities enjoy an exemption. To them, it is taxable. Up to 25,000 old age home, 1,000 per year. Then we discussed miscellaneous, where we discussed about advocates, we discussed about business exhibition held outside India, various 500 rupees entry fee, then museum, zoo, wildlife, where 500 rupees does not apply, classical or folk, player, umpire, referee, team manager, coach, sporting event, other than recognized sporting event, sponsorship of those sporting event, public convenience, public library. We discussed all these. Life insurance completely exempted, health insurance completely exempted. If it is group insurance, then in that case it will be liable to GST. RCM we already covered while discussing the charging section. 9.3, 9.4, 9.5, 5 sectors which are there. Last point, ITC. See, ITC, we first discussed inputs, capital goods, input services. Inputs is any goods other than capital goods used or intended to be used in the course or furtherance of business. Capital goods, the value of which is capitalized in the books of accounts. Input service, any service. Do you get ITC for forward charge purchases? Yes. Reverse charge purchases? Yes. IGST paid on import of goods? Yes. Tax paid under composition scheme? No, you don't get ITC. Section 16, conditions to avail ITC. You should be in possession of a invoice, debit note, or tax paying document. You should have received the goods or services. Supplier has paid the tax to government subject to section 41. Section 41, you don't have to check immediately after financial year. Wait till 30th September. Till that time, if he has not filed GSTR 3B, then in that case, you have to reverse ITC by 30th November. Then you have filed a valid return. Fourth condition. Fifth condition, supplier has filed invoice or debit note in his GSTR 1, IFF or 1A, and it is communicated in 2B. And last condition, ITC is not restricted under section 38. Depreciation, if claimed on the GST component, you will not get ITC. Lots or installments, you will get ITC only after receipt of last lot or installment. Then what is the last date to avail ITC? 30th November after the financial year or date of filing annual return, whichever is earlier. In case of revocation of cancellation, this time limit or 30 days from order of revocation. If you don't pay your supplier within 180 days, you have to reverse ITC along with interest. And remember, remember, three cases this does not apply. Supply without consideration, RCM, and third party payment. Okay. Then block credit, motor vehicle more than 25 cc to 13 passenger, including driver, you don't get ITC. If it is used for outward supply of transportation of passenger, imparting motor driving skill, or for further supply of such motor vehicle, eligible. Goods vehicle, you get. Aircraft or vessel used for transportation of goods, you get ITC. To 25 cc vehicle, you get ITC. If you get on motor vehicle, you'll get on repair maintenance insurance also. If you don't get on motor vehicle, you'll not get on repair maintenance insurance or rent of such motor vehicle. Then food and beverages, outdoor catering, health service, health insurance, no ITC. But if it is used for same category of outward supply, eligible. If it is obligation of the employer to provide it to the employee, again it will be eligible for ITC. Then the next discussion was membership of clubs, health and fitness centers, no ITC. Travel benefits to employees for vacation, no ITC. But if it is obligation of the employer under any law, eligible. Then personal consumption goods, no ITC. Don't forget, NRTP will not get any ITC except goods imported by him. Any goods or service on which tax is paid under composition scheme, block credit. Construction and works contract for immobile property, no ITC. But if it is used for plant and machinery, eligible. Plant and machinery excludes three things: pipeline outside the factory, telecommunication towers, land building, other civil structure. For these three, you will not get ITC. Some small repair done for building, which is revenue expenditure, that will be eligible for ITC. Then goods lost, destroyed, stolen, written off, or disposed by way of gift or sample, no ITC. Then any goods which is exclusively used for exempt supply, no ITC. Exclusively for non-business purpose, no ITC. Exclusively for taxable or zero rated supply, eligible. Common credit, you don't learn at Inter. Section 18, composition to regular. Can you take ITC? Yes. On stock on the previous day. Inputs full capital goods, tax paid minus 5% per quarter or part of the quarter. Regular to composition, you have to reverse ITC on stock, inputs full capital goods proportionate to remaining life of capital goods in months. Total life is 60 months. Exempt to taxable. Exempt to taxable, don't forget. Exempt to taxable, you will have to Do the same treatment as composition to regular. You can get ITC. Taxable to exempt, reverse ITC. New registration. If you apply within 30 days from the date when you are liable, effective date will be date when you are liable. Previous day stock of inputs will be eligible, not of capital. If you apply after 30 days, effective date is grant of registration, no ITC on stock. After that, whatever you purchase, you will get ITC. Voluntary registration, effective date is date of grant of registration. Try 1 day prior inputs, you will get ITC. After that, you will not get. Sorry, after that, after effective date, you always get ITC. If the invoice of stock is older than 1 year, no ITC. But reversal, you will have to do. Then transfer of business. Can you transfer e-credit balance? The answer is yes. You can transfer e-credit balance to the transferee. Even for demerger, you can distribute it to each depending on assets transferred to each transferee in that ratio. Transfer of liabilities is a must in case of transfer of business. And state wise, you will transfer the ITC. What if you sell capital goods? If you sell capital goods, you have to pay tax on transaction value or ITC availed minus 5% per quarter or part of the quarter, whichever is higher. This is what you have to pay. Don't miss out on this very important point. If you sell molds, dies, jigs, fixtures as scrap, then just do tax on transaction value, pay that much, that is sufficient. These are the topics which we have discussed today. I hope this was very useful because it is more important for me to make sure that you are able to recall the provisions and you are able to learn the wordings so that you can write the wordings in the examination. If you have reached till here and if you liked it, do give a like and give a comment and see you all tomorrow for the balance chapters. Take care.